Yes, a very good morning to all of you. Right. So yesterday, did we have a great time completing with our discussion regarding the bank audit chapter? And then also we discussed regarding the chapter of the peer review and the quality review. Right. So again, it's like too many chapters put together into one, the peer review and the quality review. Okay. In the chapter of the bank audit, we talked about the verification of the investments. Right. So verification of the investments wherein we have the ERCV, right? You check the existence, rights and obligation, completeness, and the valuation and the allocation. Then after the investments, very important part of the verification in the bank audit chapter was the verification of the advances, right? So advances, one, we said what should be the audit approach. Primarily you want to obtain evidence regarding what? Then the internal controls over the loans and advances. Then what are the substantive audit procedures and also the recoverability of the advances, right? Substantive audit procedures, we had 2 points, then 5 points, and again 2 points over there. What were the first 2 points over there? Master data and the single customer ID. Then we talked about the 5 types of accounts over there. What type of accounts did we talk about over there? Yes, what type of accounts did we talk about over there in the 5 accounts? Right, the large accounts to be all large accounts to be checked and other accounts to be checked on the sample basis. Then the problem accounts, right, which are yet to slip into the NPA category. Then we talked about the adversely commented upon accounts, then the restructured accounts, right, and also the quick or the early mortality accounts. And then last 2 points over there were regarding the completeness and accuracy of the interest being charged and also carry out the appropriate analytical procedures, right? And then we got into the nitty-gritties regarding the discussion for the bank or the verification of the advances, like accounts regularized near about the balance sheet date, right? Accounts with the temporary deficiencies over there, then limits not reviewed. What is temporary deficiency? If say it's stock statement up to 3 months, it is okay. Older than 3 months, it cannot be considered to be a temporary deficiency. Limits not reviewed, limits not renewed within 180 days, up to 180 days from the due date, okay. More than 180 days, again, what does it say? It is to be deemed to be an NPA. Government guaranteed advances are not to be treated as an NPA if they've been guaranteed by the central government and the guarantee has not been repudiated when invoked. However, this does not apply to the state government guaranteed advances. Right, then we also talked about the restructured advances, the agricultural advances, then the sale purchase of NPA. What did we discuss regarding sale purchase of NPA? That there should be a BOD policy, right, regarding the sale purchase of the NPA. Then you can only sell those NPAs which have been an NPA in your books for at least 2 years. You have to sell them without recourse, only on the cash basis, not assume any risk once the NPAs have been sold, right? Then after that, for the sale of the NPA, what did we say? On the sale of the NPA, they would be removed from the books of account of the bank, right? Then any loss is to be immediately charged to the profit and loss account, but any profit on sale of NPA is not to be recognized, and the excess provision is also not to be reversed, okay, right? Then we talked about the purchase of the NPA. It says continue with the asset classification and provisioning from the earlier bank, right? Then first, whatever amount you recover from this NPA, you adjust it against the acquisition cost, and any excess can be recognized as the profit. And for the purpose of the capital adequacy, 100% risk is to be allotted to this NPA's purchase from the other bank, right? So that was regarding the sale purchase of the NPA. Then we came to the discussion regarding the verification of the deposits, right? What were the 5 headings we discussed over there? The current and the savings account, then the term deposit, then the foreign currency deposits, then the others, that is the NRE and the NRO, and then last one, general, wherein we talked about the inflated deposits, right? Whether it is leading to any window dressing, is there any possibility of the window dressing, fraud, which may lead to a possible suitable qualification in the main audit report or so, right? Current and savings account, what we said, whenever any current account is being opened, one, you need to check whether the KYC has been completed, and second, you also need to check in whose name the current account or the savings account is being opened. Then you can also check the individual accounts accounts on a sample basis. Also, you can check the interest calculations on a sample basis. You can also check the balance confirmations, whether it is obtained periodically. Then also it is not to be netted out. Any debit balance in these accounts is not required to be netted out with the, yes, with the deposits in this particular account. Okay, right? What is a bulk deposit? Where the amount of the deposit was of 2 crore or more. Then we also talked over is bulk deposits. Then foreclosure penalty, whether it has been deducted from the applicable rate of interest, right? And in the current and savings account, we also talked about the inoperative accounts. What is an inoperative account? In which there has been no transaction for the last 2 years, right? So that's the inoperative accounts, right? And inflated deposits, what happened? You take an overdraft from the bank. Against that overdraft, you keep a FD with the bank, and against that FD, you are again asking for an advance from the bank, right? So this is leading to the window dressing. We also saw a question in the MTP for the same, right? So that completed our discussion regarding the verification of the deposits, right? Then after that, we came to the discussion of the contingent liabilities of the bank. And contingent liabilities of the bank, one, what is the audit approach? What is the written representation you will obtain from the management regarding the contingent liabilities of the bank? So what written representation of all off balance sheet transactions have been accounted for only after following the due procedure, right? Only after the event or transaction has taken place, then entered after following the due procedure, and also it is supported by the underlying documents. Then what does it say? All year end contingent liabilities have been disclosed, then disclosed again at the proper amount as per the Ind AS 37 or the AS 29. Then these contingent liabilities which have been disclosed does not include the crystallized liability, and does not also include the liabilities where the possibility of the outcome is remote. And again, for bank guarantees given on behalf of the directors, whether the appropriate steps have been taken, right? We want the written representation from the management for the same, right? Then after that, we talked about the general audit procedures for the verification of the contingent liabilities of the bank, and the specific audit procedures for the verification of the contingent liabilities of the bank. What were the specific areas of contingent liability? Claims against the bank not acknowledged as debts, then liability on the outstanding forward exchange contracts, right? Do you remember that, right? Then we talked about the bank guarantees issued, guarantees given on behalf of the constituents, then the acceptances, endorsements, and the obligation, then the other items for which the bank is contingently liable, and the bills which have been sent to the bank for the collection. Okay, right. So that completed our discussion regarding the contingent liabilities, and then we came to the discussion regarding the concurrent audit, right? We said it's an early audit, early warning system of any fraud or irregularities in the bank, right? And again, we said who decides the scope of the concurrent audit? The CIAD, the Central Audit and Inspection Department, in consultation with the ACB, the Audit Committee of the Board of Directors. Okay, who can be appointed to do the concurrent audit? Either the bank own staff or the external auditors. Own staff, they have to be independent of the branch, and external staff, they cannot be appointed for more than 5 years, and same branch, they cannot do the audit for more than 3 years, right? The concurrent audit for more than 3 years. Then we talked about the irregular, what you say, the areas covered in the concurrent audit program: cash, investments, deposits, advances, foreign exchange, housekeeping, and the other items, right? So foreign exchange has been asked us like 3 times in your exams as a question, and advances is there in the waiting list question, it's in the RTP, right? And then we talked about the reporting by the concurrent auditor, right? So first, the concurrent auditor, before issuing his report to the audit committee or the chief audit executive, he has to first submit his report to the branch manager or to the concerned officer concerned. Then minor irregularities may be resolved. Then serious irregularities need to be brought to the attention of the HO or the controlling office. And fraudulent transactions, then they have to be brought to the attention of the chief audit, the chief audit, the Central Audit and Inspection Department, the chief vigilance officer, and also the branch manager concerned, right? So serious irregularity, fraudulent transactions have to be brought to the attention of these three, right? So that completed our discussion regarding the bank audit chapter. Again, an important chapter, because at least one question comes in the exam from the bank audit chapter, right? One, and again in the MCQ you might see some questions regarding the bank audit. Okay, then after that we came to this chapter of the peer review and the quality review, right? Peer review, what did we say? First two important terms. The moment anybody says peer review, what are the first two important terms coming to your mind? Compliance with the technical, ethical, and the professional standards, and second, the quality of the assurance services. Right, so we discuss meaning of the peer review, the objectives of peer review, the scope of peer review. Right, then what do you mean by technical, ethical, and the professional standards, and what is not included in the assurance services? Then the applicability of the peer review for the level 1 units and the level 2 units, once in 3 years and once in 4 years. Right, then we also studied the eligibility to be a reviewer, then also studied about the constitution of the peer review board. Right, the constitution of the peer review board, then the stepwise approach to be adopted by the peer reviewer, and then entire peer review process. Do you remember the numbers we had over there? 777, then 275, and then again 7 and 5. What is that 7 for? Okay, so on-site review should not extend beyond the 7 working days. And last 5 is what? Okay, reply to the preliminary report has to be given within the 5 days. And the entire peer review process has to be completed within the 60 days. Okay, right? So that was the entire peer review process. What did we say? On the completion of the on-site review, the reviewer will send to the practice unit the preliminary report. Then the reply to the preliminary report has to be given within 5 days. Then the reviewer may be satisfied with the responses or may not be satisfied with the responses. If he is satisfied, he will issue the final report to the peer review report to the peer review board, and also send a copy of the report to the practice unit. And then the peer review board will issue the peer review certificate within 3 months. Okay. However, if the reviewer is not satisfied, then he will issue a modified report to the peer review board along with a copy of the report to the practice unit. And then the peer review board may order a follow-on review to be conducted after 6 months to 1 year. And then after that, the final report and then the peer review certificate. Right? When you know that your peer review certificate is about to expire, what does it say? Before 1 month before that, you have to take the steps in order to ensure that you get the peer review done. Okay, right? Can the client also request that our audit firm, please, the CA who is doing our audit, please do the peer review of them? Yes, even the client can request for the same. Right, so that completed our discussion regarding the peer review, and then after that we came to the discussion regarding the quality review, and we saw the entire quality review report also. Right, so quality, what does it mean over there? The objectives and scope of the quality review. Before that, we first saw the objectives of SQC1 given over there, and what are the important areas for evaluation as per SQC1. Right, that there should be policies and procedures, there should be engagement quality control reviewer to appointed, then there should be a person who is responsible for monitoring the quality control system, then annual declaration of the independence, then acceptance continuance, again that time checking for the independence, and the adequate training programs, as trainings and programs have been conducted to maintain the staff competence. Okay, then we came to the scope and objective of the quality review. Now this question is sitting in the RTP 2 times. Right, the scope and objective of the quality review. So what is the scope and objective? Which review are we talking about? Quality review. So first objective is to check the audit quality. Right, then to check the audit quality, they have to check the identify the weaknesses and the deficiencies, and for that they need to select a few statutory audits which have been done. Right, then they also check the compliance with the technical, ethical, professional standards. They check the compliance with the applicable laws and regulations, legal regulatory requirements, and they also check the system of the quality control. Then they also check that there is no material misstatement of the assets and liabilities, and it also includes review of the working papers of the selected statute of the AFUR. Right, so what are the terms we had over here? Audit firm under review, then the technical reviewer, and the quality review board. Okay, right, so that was one regarding the objective and scope of the quality review. Then we looked into the quality review board. Right, the constitution of the quality review board: chairperson plus 10 other members. And what does it say? Say chairperson and five members will be nominated by the central government, and the other could be the council members. Okay, right, then we looked into the functions of the QRB, the quality review board, and also the powers of the QRB. Right, so functions were similar to the functions of the NFRA. And power, what power do they have? Right, they can evaluate. Right, they can review the quality of the services. Then to review the quality of the services, they can lay down the evaluation criteria. Then after laying down the evaluation criteria, they can call for the information, and say if the information is not provided to them from the member, then they can make a request to the institute. If the information is not provided by the company, then they can make a request to the central government in the MCA to get the for assistance in obtaining the information. And then they can also take the help of the experts, invite experts, and then finally they can make the recommendation. So what are these? These are the powers of the QRB, the Quality Review Board, right? Then we studied another important question. Okay, what are the areas, or how do they do the selection of the firms for doing the quality review? So one, it says based on the criteria, based on the entities audited. Second one, criteria based on the audit firm. And third one is the quality review cycle, right? So if your firm is a firm with 1 to 9 partners, then quality review once in 5 years. And if your firm is a partner, is a firm having partners 10 to 19, then quality review once in 4 years. And 20 or more partners, then quality review once in 3 years, right? So that was the quality review cycle. And once a particular firm is selected, how many audits of that firm can be selected? 3 statutory audit. And what does it say? One partner, not more than one audit. In case if there is absence of any adverse finding in the past review. However, if there has been adverse finding, can there be more than 3 audits selected? Yes. Can there be more than one audit of one partner selected? Yes. Can it be conducted at more frequent intervals also? Yes. In case if there is any adverse finding, right? Then we studied about the empanelment of the technical reviewer. Empanelment of the technical reviewers, you remember 15 years? Then after that 10 years at least have been signing 3 start audit engagements. At least one should be other than the private limited company having turnover of more than 50 crore. है ना? 10-3-1 we studied over there. Then should not have any disciplinary proceedings going on, should not be a member of the QRB or the member ICI council or the regional level or the branch level management committee, and should not belong to the city or the region of the head office of the AFUR, right? Then we also studied the independence and qualifications of the technical reviewer. Again, he should not have any disciplinary proceedings. Then he should not have provided any statutory services or any other services to the selected entity. He should not have had any association with the AFUR. He or his firm or his partners in the network firm, all of them put together, right? All of them put together. Then what does it say? None of the disqualifications of 141(3) should be attracted by the technical reviewer. Only then he would be considered to be the independent fellow, right? In peer review, we had also discussed regarding the what you say, the obligations of the practice unit and the obligations of the reviewer, right? So here we had also studied in quality review regarding the qualified assistants. How many qualified assistants can be taken? 5 qualified assistants can be taken along with him. And then we talked about the quality review process, the various stages involved in the conduct of the quality review process. So was it similar to the peer review process? Right? Was it similar to the peer review process, the quality review process over there? Yes. And then we talked about the reporting, right? The reporting here, you could also have the QRGs, right? The quality review groups before the report goes to the QRB. In case if it's the quality review being done of a public sector undertaking, then the report will also be forwarded to the C&AG, right? And what are the actions which can be taken on the basis of the quality review report? One, the matter can be referred to the Council of ICAI for disciplinary action. Second, an advisory or a guidance may be issued to the AFUR to improve the quality of the services. Or third, if it is trivial in nature, yes, then what does it say? The matter may be closed, right? The corrective actions just ensure that the corrective actions have been taken and the matter may be closed, right? Do you remember this one? What are the 3 actions which could be taken? And then we talked about what are the types of reports which could be issued by them, what are the factors which could lead to a modification of the opinion, what are the basic elements of the review report, what do you mean by technical standards, right? So lot of discussion again in the quality review. Okay, right? Is it clear to everyone? But in the quality review, before we started with our discussion on quality review, then before after we ended with our discussion regarding the peer review, we had one question over there. What was the one question which we had over there? The difference between the peer review and the quality review, right? So we'll just complete quickly looking into that question regarding the difference between the peer review and the quality review. Are you understanding that? Looking into the difference between the peer review and the quality review. Okay, right? So difference between the peer review and the quality review. Do you think is there a lot of difference between these two? Right. So one way to write distinguish is what? You write point by point and you draw left hand hand side and right hand side, like how we studied the distinguish between other audits and forensic audit, how we studied the distinguish between audit and investigation. That is one way. Now for quality review, what they have written, peer review, quality review, have they written it point by point? No, they've written it para by para, right? So they've written one paragraph regarding the peer review and then one paragraph regarding the quality review, right? So peer review is a review of the systems and procedures of an audit firm. A sample audit files are selected, inspected by the peer reviewer. It is done for the purpose of testing the effectiveness of the systems and procedure. The intention is not to find fault, but to help the firm develop the effective system. It is a kind of a mentoring process, and it is a part of activities of the ICAI. Right, so this is just giving a briefing over here regarding the peer review. Okay, peer review is a review of the systems and procedures. To check those systems and procedures, you check a sample audit file, right? It is the intention is not to find the faults, but to help the firm develop the effective systems, So it is more of a mentoring process. And who facilitates the entire peer review process? It says the ICAI facilitates the entire peer review process. Okay. On the other hand, in contrast, a quality review is supposed to act as a deterrent, right? So here it is stopping you from something wrong happening in the audit firm or something wrong happening in the company. Then quality review board is constituted by the central government and it is independent of the ICAI, right? Peer review board was of the ICAI. Quality review board is constituted by the central government. Then what does it say? The central government has the authority to constitute the QRB, that is the quality review board, right? Then QRB carries out the supervisory and the disciplinary functions, right? So here who plays the important role? The QRB. Then a quality review normally pertains to one particular audit conducted by an audit firm. Like we said, one file, Growth Limited, one file is selected. What we see is what we saw in the year 2022 across all the CA firms in India. Only 22 CA firms were selected, and for those 22 CA firms, only the 24 files were reviewed. Right. So one particular audit conducted by an audit firm. And what is the main objective of the quality review? To find out the errors or the inadequacies, if any, committed by the auditor while conducting the audit. And serious errors detected in the quality review can also lead to the disciplinary action against the member, right? So here what is your main objective? To review the systems and procedures. Here what is your main objective? To find out the errors or the inadequacies. Okay, what I can tell you is that this question has not been asked so far, so super important. It's there in the question bank but not yet asked in the exam, so they could still ask the question regarding distinguish between the peer review and the quality review, right? So you need to do the writing practice for this one, right? The distinguish between the peer review and the quality review. Okay, and then we also are having a look at the question bank of the quality review, right? So quality review, did we see the first two questions over there? Yes. Now the third question over there, evaluating the professional judgment exercised by the auditor is one of the important aspects under quality review. Please explain the situation with reference to the applicable essay. What does this mean? Okay, when the technical reviewer, he is coming to the audit firm under review for doing the quality review, is he going to check the professional judgment which has been exercised by the AFUR? Is he going to check? Now audit firms, Sparkle and Company, do they need to exercise professional judgment when they do the audit? Yes. Now the technical reviewer, when he is coming for the quality review, is he going to check the professional judgment which has been exercised by the audit firm under review? Yes, he is required to check the professional judgment exercised by the auditor, right? So it is important for the technical reviewer to understand that professional judgment is an integral concept in the context of audit and the application of essays. Then essay 200, okay, defines professional judgment as application of relevant TKE, training, knowledge and experience within the context provided by the auditing, accounting and ethical standards in the making of the informed decisions, right? So this, where it is coming from, this definition over here, it is coming from essay 200. Okay, then the concept of professional judgment underscores the fact that standards, particularly the essays, are written down to lay down the fundamental principles that would apply to an audit. Hence, no standard can have solutions for all audit scenarios, and it is you have to apply your own judgment. The essays issued by the ICAI are principle based rather than the rule based. Hence, almost all the essays envisage exercise of the professional judgment by the auditor in the application in real life audit scenarios. right? So there is no, it's not rule based, no, it is principle based. It says you need to exercise professional judgment. So now when, how, what professional judgment to exercise, it depends upon the skills of the auditor, it depends upon the judgment of the auditor. Now the technical reviewer would need to appreciate that the exercise of professional judgment any particular case should be based on the facts and circumstances. So even though if you're taking your professional judgment, on what basis it should be made? It should be made on the basis of the facts and circumstances that are known to the auditor at the time of exercising that professional judgment. Like simple example, is issuing qualified opinion a professional judgment of the auditor? Is it a professional judgment of the auditor to issue a qualified opinion? Yeah, it's a decision which is taken by the auditor. So on what basis the auditor should take this decision? On the basis of the facts and circumstances that are known to the auditor. To put a particular matter in the key audit matter paragraph, is it a professional judgment of the auditor? Yes. To check 50 samples, is it a professional judgment of the auditor? Yes. Wherever you take a decision in the audit, that is a professional judgment. So what does it say? This judgment should be based on the facts and circumstances that are known to the auditor at the time of exercising the professional judgment. Normally, exercise of professional judgment by an auditor is preceded by the consultation on the relevant matters both within the engagement team and between the engagement team and people within or outside the firm. Right, so it says you need to take the professional judgment based with the discussion with your members of the engagement team and if required also the experts. Right, then in evaluating the professional judgment exercised by the auditor, the technical reviewer should consider the following factors. What he should consider? Whether they have considered the auditing and accounting principles, because what did we say in the definition? Training, knowledge and experience within the context provided by the auditing, accounting and the ethical standards. So what do they say? Whether they've taken into consideration the auditing and accounting principles, then whether they've taken into consideration the facts and circumstances, and also what the technical reviewer needs to check, whether it has been appropriately documented and it is not used as a justification for decision that are not otherwise supported by the facts and circumstances. Right, so professional judgment should be supported by the facts and circumstances. Are you understanding? Like I'd given you an example, I'm sure you would not remember about it. Like, you know, when you do an SFM problem over there, right, you know that when you see the problem only, you know that the final answer of this problem is 35,000. But in the exam, can you just write down 35,000 over there? No, you have to write down the entire steps. Like, you know, what is the information, then what is the formula, what is step 1, step 2, then what you derive from step 3, step 4, and then you give that the final answer is 35,000. Not writing, oh, question number 3A, answer is 35,000. It's not MCQ, no. You calculated it on a calculator and based on your calculation, you know it is 35,000. But in exam, if the question has come for 4 marks, do you have to give the full justification? Do you have to give the full facts and circumstances that how you came to 35,000 over there? Yes, so that is regarding the facts and circumstances of the engagement. Okay, right. Then after that, next question, the independence and qualifications of the technical reviewer. Then the various stages involved in the conduct of the quality review assignment. Then the powers of the QRB, the reporting and other procedures, basic elements of the review report, then the actions that may be recommended. So these are direct questions from the chapter. And then what are the reporting responsibilities of the technical reviewer while carrying out the quality review assignment? Right, so what are the reporting responsibilities? One, he has to report on the quality control system. What is one responsibility? To report on the quality control systems. And just as we had the inherent limitations of peer review, do we have the inherent limitations of quality review also? Okay, when the reviewer, when he technical reviewer, when he does the quality review, will he identify all the deficiencies and weaknesses in the audit firm under review? No. So what does it say? Technical reviewers review would not necessarily disclose all the weaknesses in the quality of the attestation work. For example, instances of lack of compliance with the technical standards. There are inherent limitations in the effectiveness of system of the quality control also. And system of quality control may become inadequate because of the changes in the conditions. And technical reviewer also identified what they consider to be deficiencies and defects or criticism of the firm's quality control system. So basically, what is the technical reviewer commenting upon? He is commenting upon the quality control system of the CA firm. Right? He is commenting upon the quality control system of the CA firm. Okay, right. So that completes our question bank. Yesterday we were yet to look into the question bank of quality review, right? So now we have even completed with looking with the question bank of the quality review, right? So now is one chapter completed over there. With chapter completed over there regarding the peer review and the quality review, right? Regarding the peer review and the quality review, right? So now we come to another chapter which is regarding the audit of the insurance companies, right? So now coming to another chapter which is regarding the audit of the insurance companies. Okay. Right, so audit of the insurance company. Once that we complete this chapter, we are completed with all the big chapters over there, right? So like if we want to take a stock of the situation, what are the chapters that we are left with? The audit of the insurance companies. Then after that, we need to study the audit of the public sector undertakings. Then we need to study the audit of the NBFCs, the non-banking financial companies, and then the special aspects of auditing in an automated environment, right? The special aspects of auditing in an automated environment, right? So our agenda for today is to discuss the chapter on the audit of the insurance company and the audit of the public sector undertakings. Okay, right? So again, first $1,000,000 question whenever we begin with any particular chapter is what is the weightage? How much question comes in the exam? Or does the question come in every exam? Right, regarding the chapter of the insurance company, right? So yes, just as bank audit, every exam you see a question. Similarly, insurance company also, every exam we do see a question on this particular chapter. Okay, you know, in the old syllabus, like before this type of this current syllabus came, this chapter was called as the audit of the general insurance company, but now it is called as the audit of the insurance company. Why? Because now they have included the discussion not only of the general insurance company but also of the life insurance company. Like I told you, earlier in the syllabus we only had the peer review. Now what we also have is the quality review. That's why what I told you, peer review is ATF and quality review is R raised to 10. Same applies over here. General insurance company is ATF and life insurance company is the R raised to 10, right? They've started asking a lot of questions regarding the life insurance company also. Are you able to follow what I say? Right, so general insurance company and then you have the life insurance company, right? In peer review also, did we had the scope and objective of the peer review and then the scope and objective of the quality review, right? Did we have the eligibility of the reviewer and then the eligibility empanelment of the technical reviewer? Did we have the peer review board and the quality review board? Right, similarly now in this particular chapter one, we are going to have some common contents, right? Some common points of discussion in this chapter, and then after that general insurance company and the life insurance company. Then as an auditor, how will you do the verification of the premium received by the general insurance company, premium received by the life insurance company, then the claims paid by the general insurance company, the claims paid by the life insurance company, then the operating expenses of the general insurance company. Operating expenses is rather common, right? So the investments of the general insurance company and the investments of the life insurance company, right? The investments of the general insurance company and the life insurance company, then the commission payable to the agent of the general insurance company and the commission payable to the agent of the life insurance company. And fortunately or unfortunately, these points have nothing to do with each other. You understand, if you look at the point of verification of premium income for a general insurance company and you see the points for verification of premium income of a life insurance company, one is from, heaven, one is from hell. Like they're absolutely different questions over there, right? If you look into the claims of general insurance company, claims of life insurance company, different point. Investments also altogether different points for verification, and commission also altogether different points, right? So you need to keep this one characteristic of this chapter chapter in the mind. And then otherwise, what are we going to discuss in the chapter of insurance company? We are going to discuss regarding the financial statements of an insurance company. What is the minimum paid up share capital of an insurance company? Then also what is the concept of the solvency margin in case of the insurance company? Also discussing a term over there called as the trade credit insurance. Another term discussed over there is regarding the unexpired risk reserve, right? The unexpired risk reserve. Please no talking in the class. Another discussion which is regarding the reinsurance. Another discussion which is regarding the co-insurance, reinsurance and the co-insurance. Then again a question regarding the appointment and the reporting by the auditor, the appointment and the reporting by the auditors of the insurance company, right? So these are some common points for discussion which we will have in this chapter. And then apart from these common points, I told you we have that match which takes place over there, no? Like a football match or a cricket match, right? So here we have GIC versus LIC. So verification points for premium income of GIC and verification points for premium income of the LIC. And then for LIC, now we have a lot of special points also over there. Like in LIC, they've added the points regarding the role of actuary and the importance of actuarial process. Then the underwriting process in case of the actual life insurance company. Then they are also talking about the policy lapse and revival in case of the life insurance company, the policy lapse and the revival. Then they are also talking about the policy surrender, right? Also talking about the policy surrender in case of the life insurance company. Also talking about the FLC. What is FLC? The free look cancellation in case of the life insurance company, right? So all these are candidates for the new questions in the exams, right? All this is there only in the discussion of the life insurance company, right? So what I have tried to do over here, I've tried to give you a general outline or a helicopter view of the chapter of the insurance company, right? So actuary, underwriting, policy lapse and revival, policy surrender. What is FLC? Free look cancellation, right? Free look cancellation. So these are the special points which we have for discussion in the life insurance company. Are you understanding that? Then we also have the contents of the management report, right? In case of insurance company, you know, there is a new there is a different requirement over there that they need to have the management report. So we are also going to look into the contents of the management report. Okay, right. And again, before we start looking into the, what do you say, the chapter of the insurance company, let us just have a quick look into the, you know, different LIC, what do you say, insurance company website, right? So this is like the insurance plan, the pension plan, right? So if I look into the insurance plan over here, these are the different types of LIC policies and their names are so interesting: Bima Jyoti, Ratna, Sanchay, Varsha, Anand, Lakshya, Labh, Stambh, Sheila, Umang, you know, Dhan Rekha, right? So many interesting, Jeevan Tarun, Shiromani, and such interesting names they have, right? LIC. And I'm sure each one of you would be having at least one relative who is an LIC agent. You cannot exist in India without anybody around you being an LIC agent. You understand? Now, somebody in your neighborhood or some relative of yours has to be an LIC agent over there. Okay, right. So then the financial details, the corporate governance, the shareholding pattern of the LIC, right? So the shareholding pattern being given over there, right? The dividend details as on say 30th of September 2022, right? What has been the shareholding pattern, right? So whether listed, then the tabular format of the shareholding has been given over here, right? The tabular folding, yes, the promoter groups are holding how many of the shares, non-promoters are holding how many shares, then the shares under the employee trust, or yes, number of shareholders being given over there, right? The number of shareholders being given over there. Okay, right? So that is life insurance company. So do you see over here, you get to see the shareholding pattern, bonus details, split details, then also you see the policies and the code of conduct, right? Code of conduct, did we study this in SEBI LODR also? And then policy for determining material subsidiaries in India. Do you remember material subsidiaries? 10%. But for the requirement of the one director on the board, it is 20%, right? Then the materiality policy, then the surplus distribution, whistleblower policy, right? So all these policies being given over there, material contracts and document, public disclosures as per the IRDA norms, right? Then after that, the customer services being provided, then premium payment, payment at cash counter, payment through the alternatives, then plan the NAV, right? And then the locator, then what are the various pension and group schemes which they have, right? So different pension and group schemes, right? So group credit life, premium group, Jeevan Jyoti Bima, right? Accident benefit rider, right? So all these are the different of the life insurance company, right? Then apart from the life insurance company, we have the general insurance company, right? So general insurance company, again you have over there their annual reports, and then you also have the investor public disclosures, right? The investors, the public the disclosures which have been given over there, and then after that the various types of the resources, tenders and notices, and the various businesses which are done by the general insurance corporation, right? So this is regarding the general insurance corporation, right? So life insurance and general insurance, where you get your fire insurance done, that is the general insurance, and where you get your life insurance done, that is the LIC, right? So you have the GIC and the LIC, and we have a lot of private entrants also over here, like we have the HDFC Ergo, the HDFC Ergo, and this HDFC Ergo is providing so many types of the insurance, car insurance, two-wheeler insurance, right? Health insurance, cyber insurance, travel insurance, right? Goods carrying, tractors and miscellaneous, right? So these are the different types of the insurance. So cyber insurance, if I look into, right, again it says cyber insurance in India. Why do you need the cyber insurance, right? So again the theft, what are the different types of thefts which are covered, right? Then another, what does it say? Buy car insurance, home insurance, tractor insurance, bike, scooter, or the critical illness insurance, travel insurance, health insurance, third party vehicle insurance, right? So these are the different types of the insurance which you can buy on the HDFC Ergo website. Are you understanding that, everyone? Right, the HDFC Ergo. Okay, right. Then apart from the HDFC Ergo, we also have the, right, one more which I had opened over here, right, the GIC, and then yes, we also have the IRDAI. Just as for banking companies you had the RBI, here you have the Insurance Regulatory and the Development Authority of India, right? So you have the history of insurance, then the insurers, life insurance, general insurance, reinsurance. Oh my God, look at the list of reinsurers which have been given over there, right? So general name of the company, registration number, and the name of the appointed actuary over there. In case of the reinsurance over there, right? So reinsurance health, and then you also have the various list of the reinsurance branches, right? So what are the various branches, where the reinsurance can be done, right? All those details being provided over there, right? So all, what does it say, right? The Munich branch, then the Swiss reinsurance, then the SCOR SE India branch, then the Hanover, right? Then the RGA Canada, then also the Excel insurance, then the General Insurance AG France, Global Corporate, then the Factory Mutual Insurance, Lloyds, then the Market Services India Private Limited. Because foreign insurers, can they do the direct insurance business in India? Foreign insurers, can they do the direct insurance business in India? No, foreign insurers, they can only do the reinsurance business in India. That is why we see the name of the foreign insurers over here. And then you have the list of the life products, list of the, right, the general insurance products and the various plans, right? So ACO General Insurance Limited, Bajaj Allianz General Insurance, Bharat AXA, then the Chola Mandalam MS General Insurance, Edelweiss, right? Future General, Go Digit General Insurance, right? Then to compare all these insurance policies, we have one more website, no, policybazaar.com. You understand now, wherein it says now you're getting the insurance offer from 2 3 companies. So now which premium is the best? So to compare all of that, you have the, right, the Policy Bazaar, right? So Kotak Mahindra, Liberty General Insurance, then Magma HDI, then the Navi General Insurance Limited, right? The Raheja, the Reliance General Insurance, Royal Sundaram, right? Have you heard the name of Royal Sundaram? Right? Then the Shri Ram General Insurance, Tata AIG, the Oriental Insurance, Universal Sompo, right? So these are the different types of the insurance companies providing the general insurance in India. Are you able to follow that? Right? That is for the general insurance. And then you also have the list of the life products over there, right? The list of the life products being provided over there by the different insurance companies, right? So here, if you see in their name, you always see the word life over there, right? Life insurance, Kotak Mahindra life insurance, Aviva life insurance, Exa life insurance, and so many of them, right? So in this chapter, what are we talking about, right? We are talking about these different types of the insurance companies over here, and who is the regulatory authority in case of these insurance company, right? Who is the regulatory authority in case of these insurance companies, right? It is the IRDAI, and which is the act which is applicable to them, right? The Insurance Act, right? You have the Insurance Act which is applicable to the insurance companies. Okay, right. And then see, generally a very good way to study any particular chapter is what? One, you go through the websites. One, what option you have is that you can go through the various websites, and second option that you have is that you can go through the, right, you can go through the annual report. So when you look into these two pieces of information, you get a good idea regarding what is there regarding these general insurance company, right? So like this is HDFC Life and this is HDFC Ergo, right? This is HDFC Life and HDFC Ergo. So this is regarding the life insurance and this is regarding the general insurance. Are you able to follow this, everyone? Okay, right. Yes, please, no talking in the class, right? No talking required over there, right? So we are talking about the HDFC report over here. And if we see the contents of the annual report over there, what does it talk about? Company highlights, then the brief profile of the directors, independent auditors report. Then now see what is included in the financial statements of an insurance company. Please, no talking, right? What is included in the financial statements of an insurance company? Generally, what is included in the financial statements, what we know is the balance sheet and the profit and loss account, and then the cash flow statement and statement of changes in equity where applicable, and the notes. But in case of insurance company, again, you've done this in your advanced accounts problem. What is included in the financial statements of an insurance company in addition to balance sheet and profit and loss account? Also the revenue account, and also the receipts and payment account is subject to audit. It is also a part of the financial statements of the insurance company. It is also a part of the financial statements of the insurance company, right? So what does it say? The balance sheet, profit and loss account, right? Then the receipts and payment account, and also the revenue account. Why receipts and payment account and revenue account also? Because it is a part of the financial statements of the insurance company. And then I told you, insurance company, they also have this management report, right? They have this requirement of the management report over there, and then the glossary are products, customer testimonials, and the awards, right? So we'll also look into the audit report and also look into the contents of the management report, right? So where are the contents of the management report? On page number 137, right? So quickly, I'll just come after finishing with all the schedules over there. What discussion do they have over there is regarding the contents of the management report, right? So these are all still the notes to account. Yes, and then after that you have the contents of the management report. Okay, so when we start studying and seeing this in the chapter, we'll also come and have a look over here. Okay, what are the contents of the management report, right? See, earlier we had an option, wherein we could study the contents of management report, like students, because the volume of the syllabus is very high. They say now what is the probability that this question will come? Like premium claim is like the ATF, all time favorite question, but management report don't know whether question will come or no. But now what happens now, because of the MCQ part of the paper, even these type of contents over there, we need to do a very fine reading, right? Have a very fine discussion over there, right? So now with that, let's begin and let's end with the chapter of the insurance companies. Okay, right? So whenever you also want to study any chapter, would it be a good idea for you to go through the website of that particular types of companies which you want to study, or to go through the annual reports of those companies over there? Will it give you a better understanding of what we are discussing, right? And it won't look only theoretical over there. Okay, right? So insurance, and you have the life insurance, and then you have the general insurance. And what does it say? The party which is bearing the risk is called as the insurer or the assurer, and the other party is called as the insured or the assured, right? The insured or the assured. Okay, so you have the life insurance and you have the general insurance. Okay, then what are the important points of distinction between the life insurance and the general insurance, right? So life insurance can be seen as an investment apart from insurance, I know, because you give a particular 10-year policy, 15-year policy. At the end of 10 or 15 years, you can also receive the money which you have invested in the life insurance. But general insurance, if I take a fire insurance policy for the premises, 1 year I pay 1 lakh premium over there. If fire doesn't occur in that 1 year, then do I get the money from the insurance company? No. And that 1 lakh has gone as an operating expenses, right? It is just an operating expenses. So life insurance, can it also be seen as an investment apart from insurance? Yes. But general insurance mostly doesn't give any of the maturity benefit, but promises payout in case of the loss due to the unavoidable circumstances. So if the fire takes place, will they pay me the money in that case? Yes, in that case they will pay the money, but otherwise they will not pay any maturity benefits or so. Okay, right. Then life insurance, the term may be fixed or variable. You can do a one time payment or 20-year policy, 30-year policy, right? So the term may be fixed or variable, but generally general insurance policy is taken for 1 year, right? You take the vehicle insurance of your vehicle, two-wheeler, for 1 year. After 1 year you need to renew it again, right? So generally general insurance is for a period of 1 year. Then payouts are certain, either as claims or as the maturity benefits. Your payouts are uncertain, they may or may not arise. And then what does it say? Life insurance is multi-purpose. That is, it is done for investment purposes also. It is done for tax benefits also, because you get a deduction under the income tax law, right? And then also the insurance, right? And whereas only for general insurance, what is the sole purpose over there? Only the insurance, right? Only the insurance. Okay, right. So what does it say? Life insurance can be seen as investment plus insurance, whereas this is only the insurance. Here the term could be fixed or variable. Here the term is fixed to be 1 year. Are you understanding? Here you get the claims or the maturity benefits. Here the payout is uncertain. You may or may not get, right? Uncertain. May or may not get the returns. Okay, right. Here it is multi-purpose, and here it is the multi-purpose, they say. And here the sole purpose is the sole purpose is the insurance. So that is multi-purpose. This is the sole purpose. Okay, right? So your investment plus insurance. Here only the insurance. Here the term is fixed or variable. Here the term is 1 year. Here you can get the claims or the maturity benefits. Here the payouts are uncertain. This is multi-purpose. This is sole purpose of the insurance, right? Solely for the purpose of the insurance. Is it clear to everyone? Can this be a retail question in your exams? Yes. The distinguish between the life insurance and the general insurance, right? Can they ask a retail question in the exam on this one? Yes, there could be a separate question. Okay, now coming to the important provisions of the Insurance Act 1938 and the regulations there under. Right, so what did we study? Insured and the insurer. So insurer means nothing but the insurance company, right? Insurer means who is issuing the insurance policy. So in India, who can be the insurer as per the Insurance Act? One, it says it has to be an Indian insurance company. Now, what do you mean by an Indian insurance company? In which the foreign investors, including the portfolio investors, do not exceed 49% of the paid up capital. That will be considered to be an Indian insurance company, right? So is for FDI allowed into insurance business? Foreign direct investment? No. What does it say? There is a cap of 49%. Is FDI allowed? Yes. But is 100% FDI allowed? No. What does it say? Indian insurance company. So where the foreign investors, including the portfolio investors, do not hold more than 49% of the paid up equity capital of such Indian insurance company. Okay. Or another form of the insurer is what? That it could be a statutory body established under an act of parliament to carry on the insurance business. So where you have the LIC and the GIC. Or what it could be an insurance cooperative society. So you can, just as you have the cooperative bank, you can also have the cooperative insurance organization, right? And then also, what is the last one over there? A foreign company. Can a foreign company also be doing the insurance business in India? Yes, but only doing the reinsurance business. And how doing the reinsurance business? Through a branch established in India, right? Through a branch established in India, right? So again, what is the question which can come in the MCQ part of the paper? Okay, which of the following are included in the definition of insurer? And what they say, one, the Indian insurance company, a statutory body established under an act of parliament, and they write over here to carry on the banking business. You don't write it, right? Then an insurance cooperative society, and they say a foreign company engaged for the insurance business through a branch established outside India. Okay, this is what they write. And in the 1, 2, 3, 4, which of the following are included in the term of the insurer? And then after that, four options given over there. What is going to be the D option? All of the above. And what is going to be the D option? All of the above, right? Then what is going to be A option? 1, 2, and 3. Right, what is another option? Say 2 and the 3. And what is going to be another option which needs to be there over there is the 1 and the 3, right? So 1 and the 3. Right, so which is the correct option over here? C is the correct option. Why? Because they do drafting errors in the making of the MCQ question. Just don't go with the first word and say that, "Arey, this looks very familiar. This looks like the definition of the insurer only over there." No, you have to read it till the end line over there. And generally, all of the above, none of the above, any of the above are our favorite answers which we like to select in the exam. Right? So no, 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 no. And now don't hate them also. And sometimes it might be all of the above. Now don't be preconditioned कि नहीं, it just cannot be all of the above. There has to be some drafting error. No, be knowledge based and don't be opinion based. Be knowledge based, be factual based. Right, here they could do now they say a statutory body established by an act of parliament. Now they will to carry on the banking business. Now where that is coming in the definition of insurer? Then a foreign company engaged in insurance business through a branch established outside India. No, no, again, does it make any sense for us? No, it is not making the sense, right? So I'm just giving you an idea regarding how you need to be very, very careful when you are studying the MCQs, right? When you're looking into the MCQ questions in the paper. Are you all getting an idea regarding that? Okay, right. Then have we studied? So what are the four types of the insurers? One, it could be an Indian insurance company. Second, it could be a statutory body established under an act of the parliament, or it could be an insurance cooperative society or a foreign company engaged for reinsurance business through a branch established in India. Okay, and what is an Indian insurance company? In which the foreign investors, including the portfolio investors, are not holding more than 49% of the paid up capital. Okay, and then foreign insurance company, what does it say? Through a branch, reinsurance business through a branch established in India. And what do you mean by reinsurance? Okay, already say I am an insurance company and you are the policy holders. I have issued the policies to you, right? So you are the insured and I am the insurer. And whatever insurance cover I gave to you, I got it reinsured from another insurance company. So that is the concept of the reinsurance, right? That is the concept of the reinsurance. Okay, right. Next question. What is the minimum paid up share capital for the insurance company? What is the minimum paid up share capital? 100 crore. Equity share capital. Minimum paid up equity share capital of an Indian insurance company carrying on the general as well as the life insurance business should be 100 crore, excluding the preliminary expenses incurred in the formation and registration of the company. MCQ ATF. Right, what is the minimum paid up equity share capital of an insurance company? It says 100 crore, excluding the preliminary expenses incurred for the formation and registration of the company. Excluding the preliminary expenses incurred for the formation and registration of the company. And what is the solvency margin which is to be maintained by the insurance company? 150%. We'll come to this shortly. Right, we have a discussion regarding solvency margin. So that time we will discuss more about it. Right, so have we completed page number 1? Right, have we completed the page number 1 over there? Okay, right. Now coming to principal enactments governing the insurance audit. Right, the principal enactments governing the insurance audit. So again, out of our general knowledge, what we would know, the Insurance Act 1938, the IRDA Act 1999, and the Companies Act 2013. These are the laws which are applicable to the insurance company. And then what does it say? IRDA Act, and then you also have the IRDA regulations, right? So one, the Insurance Act, and then you also have the Companies Act. Then you have the IRDA Act, and then the IRDA regulations framed under the IRDA Act. And then in addition to that, you have the IRDA investment regulations and the IRDA preparation of financial statements and the auditor regulation 2000. Right, so these are the 6 enactments governing the insurance audit. Had we seen similar question for the bank audit also? Had we seen a similar question for the bank audit also, the principal enactments governing the bank audit? Right, so here we are talking about the principal enactments governing the insurance audit. Okay, now coming to the next question, which is regarding the form and content of the financial statements. So in case of an insurance company, is even the receipts and payment account subject to audit? Is the revenue account also subject to audit? Yes, because it is included in the definition of the financial statements of an insurance company. So if I come to the question bank, question number 1, in an audit of an insurance company, the receipts and payment account is also subject to audit. Comment. Right, receipts and payment account, is it also subject to audit? Yes, section 11 of the Insurance Act provides that every insurer, in respect of insurance business transacted by him and in respect of the shareholders fund, shall at the expiration of each financial year prepare with reference to that year what? A balance sheet, a profit and loss account, a separate account of the receipts and payment, and a revenue account in accordance with the regulations as may be specified. Are you understanding? So is revenue account and receipts and payment account also included in the financial statements of an insurance company? Right, revenue account and the receipts and payment account. Okay, and then later on we are going to see the contents of the audit report. And in audit report also, what does it say? Balance sheet, profit and loss account, revenue account, and the receipts and payment account, whether they give a true and fair view, true and fair view, true and fair view. Right, so auditor's opinion, does it also cover the revenue account and the receipts and payment account also? Yes, auditor's opinion also covers the same because it is included in the financial statements of an insurance company. Are you understanding that? Right, the receipts and payment account and the revenue account. So what is included? Did you know where I mark this? Page number 13.4, towards the end over there, right, where we talk about the contents of the audit report. Right, so balance sheet gives a true and fair view, revenue account gives a true and fair view, profit and loss account gives a true and fair view, and the receipts and payment account gives a true and fair view. Right, the receipts and payment account gives the true and fair view. Okay, right, so we talk about the financial statements of an insurance company. Right, so page number, my god, 492 page report. And so that's like a huge report being prepared over there. Right, so here if you look into the revenue account and all of that, and before that if we look into the independent auditors report, right, what does the independent auditors report say? Right, key audit matters nowadays you get to see everywhere. Right, what does the independent auditors report say? Opinion in case of the balance sheet, it gives a true and fair view in case of the balance sheet, in case of the revenue account, in case of the profit and loss account, and in case of the receipts and payment account. Are you getting that? HDFC Life Insurance Company Limited. Right, so generally auditor's opinion is on the balance sheet, profit and loss, but here the auditor's opinion is also on the true and fair view of the revenue account and the receipts and payment account. Is it clear to everyone? And then again we have the key audit matters, right, the other matter, other information. Right, other matter, what does it say? The policies which have been discontinued. Right, then other legal regulatory requirement. Right, so we'll come to these reporting on the other legal regulatory requirement also. Anyways, what are we discussing over here? The form and content of the financial statements of the insurance company. So one, what we discussed, okay, what is included in the financial statements of an insurance company? Can we write down over there question number 1? Okay, right, then what does it say? It also has 3 schedules. Just as the Companies Act has the schedule, even the insurance law has the schedule. Right, so schedule A is applicable to the life insurance business, B is applicable to the general insurance business, and C is relating to the matters to be dealt in the audit report of an insurance company. Right, so life insurance business, then the general insurance business, and then the auditor's report of an insurance company. These are the 3 schedules which are given in the IRDA regulations. Okay, right, now what are the requirements of the schedule? What does it say? Applicability of accounting standards. So are AS also applicable to an insurance company? And when insurance company is preparing its revenue account, receipts and payment account, profit and loss account, shall it comply with the requirements of the accounting standards issued by the ICAI or under 133 of the Companies Act? Yes, except for, what does it say? Except that insurers carrying on the life insurance business. That means this exception is not there for the general insurance. It's only for the life insurance business. That cash flow statement will be prepared only under the Direct method. There are two methods, no, direct and indirect method. So it says for life insurance company, you need to prepare the cash flow only under the direct method. Second, what does it say? AS 13, accounting for investments, will not be applicable. Now, what does it say? Only in case of the general insurance business company, right? So this point is now for the general insurance company, though they earlier said life insurance business, right? But what does it say? General insurance company, will you do the valuation of your investments as per AS 13? No, you will not do the valuation of your investments as per the AS 13. And segment reporting, what does it say? It will apply to all insurers, LIC as well as the GIC. It will apply to all insurers, irrespective of the requirement of the listing and turnover mentioned therein. And only in case of general insurance business, the minimum segments have been prescribed by the IRDAI. Right? So generally, when you study the AS 17, there you have the applicability, okay, which companies are required to give the segment reporting. But here it says the applicability is not applicable. Always insurance companies, you need to do the segment reporting. Right? So AS3, cash flow only under the direct method. Then AS 13 for valuation of investments, not applicable. And AS 17, always applicable. Are you getting that? Cash at AS3, direct is the cash flow statement to be prepared only under the direct method. AS 13 never applicable, and AS 17 always applicable. Right, so that is the exceptions to the accounting standards. Are you understanding that? Right, and then what are the other points in the schedule? The premium, acquisition cost, claim, actuarial valuation. And again, this next one has been a retail question in your exams. What has been the retail question in your exam? Procedure to determine the value of the investments, right? So now what did we say? AS 13 not applicable. As per AS 13, how do you classify the investments as per AS 13, how do you classify the investments as long-term investments and the current investments, right? That is how you classify. Then what you say? Current investments cost or NRV, whichever is lower, and long-term investments at cost, and only permanent diminution in the value of investments is to be considered. Now, this is not applicable to the insurance company. So now, what is the classification of investments for an insurance company? Four classifications. What are the four classification? Investments in real estate investment property, investment in debt securities, investment in the equity securities and derivative instruments that are traded in the market, and the unlisted and other than actively traded securities and the derivative instruments. Right, so which are actively traded and which are not actively traded. So do you get the four classification of investments of an insurance company? What are the four classification? Real estate investment property, then the debt securities, then equity which is traded, and equity which is not actively traded. Are you understanding that? Then how the valuation is required to be done? Real estate investment property at historical cost, so debt securities at the historical cost, equity securities at the fair value, and the unlisted and other than actively traded at the historical cost. So 1, 3 and 4 is at the, sorry, 1, 2 and 4 is at the historical cost. Only 3 is at the fair value. 1, 2 and 4 is at the historical cost, only 3 is at the fair value. Are you understanding that? Right, then what are the further nitty-gritties over there? It says historical cost subject to revaluation at least once in every 3 years. Right, so historical cost subject to revaluation. Again, can it be an MCQ in your exams? Yes. Right, revaluations once in every 3 years, and the change in the carrying cost of the investment property has to be taken to the revaluation reserve, and the insurer shall assess at each balance sheet date whether any impairment of the property has occurred. So revaluation you have to check once in 3 years, at least once in every 3 years, but impairment you have to check it at each balance sheet date. Right, so revaluation once in 3 years, but impairment has to be checked at each balance sheet date. Then debt securities, historical cost subject to the amortization. Then equity securities which are actively traded, what does it say? They have to be calculated on the fair value on the balance sheet date, and this fair value has to be the lowest of the last quoted closing price at the stock exchange. Again, they asked an MCQ on this one. Right, lowest of the last quoted closing price. So say lowest or average or highest, or some other last quoted opening price, closing price or something. So lowest of the last quoted closing price at the stock exchanges where the securities are listed shall be taken. And the lowest of the last quoted closing price. Are you understanding this? Right. And then what is the last one? Other than actively traded, they are to be taken at the historical cost, provided diminution in the value to be made. And this diminution, that means say historical cost was 100 crore. Now there is a diminution in the value of the investment. Say there is diminution of 20 crore. So now what is the value of the investment? 80 crore. Later on, can there be a reversal of the diminution? Can again the value increase? Yes. So can you reverse it? Yes. And now say there is an increase in the value of 30 crore. There's an increase in the value by 30 crore. So now if I make it 30, what will happen? It will become 110. But what does it say? It should not exceed the historical cost. That is why upward revaluation can be done only to the extent of the 20 crore. Can be reversed if there is an increase in value, but it should not exceed the historical cost. So you provide for diminution, then there is an increase. Can you reverse the diminution? Yes, but can it exceed the historical cost? No, it cannot exceed the historical cost, right? So again, a candidate for the MCQ, right? Are you understanding that over there, right? So again, an important question over there. Okay, right, can be reversed if there is an increase in value, but it should not exceed the historical cost. Clear to everyone? So yeah, right. Did I use three colors over here? First color for doing the classification: real estate investment property, debt security, actively traded, not actively traded. Then second color I used for the valuation: historical cost, fair value, and the historical cost. And third color for the nitty-gritties. What do we say? Revaluation once in every 3 years, impairment at each balance sheet date. Then historical cost subject to the amortization. Then fair value at the lowest of the last quoted closing price, right? Then after that, the historical cost for the other than actively traded, historical cost provision for diminution to be done. It can be reversed, but it should not exceed the historical cost. Are you all able to follow this? Everyone, are you all with me? Right. And then you have the loans and the ULIP and the funds for the future appropriation and so, right? So that is regarding what is to be included in the financial statements and the disclosures forming part of financial statements, general instructions. And what is the part 4? Part 4 is the important one for us, wherein we have the contents of the management report, right? Wherein we have the contents of the management report. Okay, right. So again, just as I told you, we had opened this management report over here. What does it say? In accordance with the part 4, right? Are we looking at the part 4 right now? Right? Did we see over here that it is the part 4? Part 4 contents of management report? Yes. So what does it say? In accordance with the part 4 of the schedule B of the IRDA and audit report of regulations 2002, we confirm the validity of the certificate of registration. Then all material dues payable to the statutory authorities have been paid. We confirm that the shareholding pattern is in accordance with the statutory regulatory requirement. We declare that none of the funds of the policy holders have been directly or indirectly invested outside India. We confirm that the company has maintained the solvency margin. We certify that the value of the assets have been reviewed as on the balance sheet date. Right, so what have we seen over here right now? The first 6 points over there. We confirm the validity of the certificate of registration. Then to the best of, who is saying all this? Management of the insurance company. That all material dues payable to the statutory authorities have been paid. Because for them is Caro applicable? Caro not applicable. No, insurance company. Right, so that is why it has been put over here. Then shareholding pattern, whether it is as per the statutory regulatory requirement. Then what does it say? As funds have not been invested directly or indirectly outside India. Then talking about the solvency margin and all the assets have been reviewed. Okay, right. So confirmation about regarding the continued validity of the registration granted by the authority. Then all the dues payable to the statutory authorities have been paid. Then confirmation to the effect that the shareholding pattern and any transfer of funds during the year are in accordance with the statutory or regulatory requirement. Then it has not, declaration that the management has not directly or indirectly invested outside India the fund of the holders of the policies issued in India. Then confirm that the required solvency margins have been maintained. Then confirm that the value of the assets have been reviewed on the date of the balance sheet. Are you able to get whatever we discussed over there? Are we seeing the similar points over here? Okay, right. Then let us continue looking on to this report. Right, the company does not have any operations outside India. That is point number 8. Does not have any operations outside India. For point number 7, what does it say? The company is exposed to a variety of risk. And what does it say? Again, they are monitoring this risk closely. Right, so company is exposed to a variety of risk. And again, risk management system. Does the company have a risk management system? Yes. Then the company does not have operations outside India. Then the aging analysis of the gross claims during the preceding 5 years has been given in Annexure 1. The average claim settlement during the preceding 5 years has been given in average Annexure 2. Right, so that is regarding the average claim settlement. So what are the next points over there? No part of the life insurance fund has again been directly or indirectly applied in contravention of the provision. Then overall risk exposure and the strategy. Then operations in other countries, if any, with a separate statement giving the management's estimate. Aging of claim, indicating the average claim settlement time during the preceding 5 years. So can they ask this as an MCQ in the exam? Right, that in the contents of the management report, the average claim settlement is required to be given for last year or for financial year or for last 3 years or for last 5 years. Right, so it is required to be given for the preceding 5 years. Right, then certification to the effect of how the valuation of investments has been carried out. Then review of the asset quality and the performance of the investment. Then the director's responsibility statement. Now, where had we discussed this director's responsibility statement? 134 subsection 5. And now, wherein we had say 3A, 1G and 2S. Right, what were the 3A? Accounting standards, then the accounting policies and estimates, and then the accounting records. These were the 3A's. Right, then the going concern basis. Right, so 3A, 1G, is it common? 3A, 1G, is it common? Yes. And what is the different point over there? The management has ensured that an internal audit system commensurate with the size and nature of the business exists and it operates effectively. So this is corresponding to my clause 14 of para 3 of CARO 2020. And a company has an internal audit system which is commensurate with the size and nature of its business. And what is the last point in the contents of the management report? A schedule of the payment which has been made to individual firm companies and organizations in which the directors of the insurer are interested. Right, the schedule of the payments being made to them. Okay, right, so these are the contents of the management report. Is this a retail question for us? The director's responsibility statement. Right, so you have the accounting standards, accounting policies and estimates, the accounting records, and then after that you have the going concern. And what is the unique new point over there? Internal audit system. And then the payments being made to the direct company firms, individuals where the directors are interested. Are you understanding that? What are we discussing over there? The contents of the management report, right? The part 4. At the contents of the management report, right? So what are the contents of the management report? One, the management has to confirm regarding the registration. Second, they need to confirm regarding the dues payable. Third, they need to confirm regarding the shareholding pattern. Then they need to confirm regarding the funds that they've not invested them outside India. Then they need to confirm regarding the solvency margin. Then they need to confirm regarding the value of the assets. Are you understanding that? Then no part of the funds have been invested. Again, so they talk about the fund, but they've not been invested in contravention of the provisions of the Act. Right, so what does point number 4 say? That the funds have not been invested outside India. What does point number 7 say? That it has not been invested in contravention of the provisions of the Insurance Act. Right, then what is the next point over there? Disclosures with respect to the risk exposure and strategy. Then the operations in the other countries, right? The operations in the other countries, right? Then the aging, the average claim settlement, right? So the average claim settlement, right? The average claim settlement. Then how the valuation of the investments has been done. So one point is where they are talking about the valuation of the assets. One point is where they are talking about the valuation of the assets, and one point over here where they are talking about the valuation of the investments. Then they are also talking about the performance of the investment and the asset quality. So valuation of assets, valuation of investment, asset quality and the performance of the investment. Then you have the director's responsibility statement, and then a schedule of payment being made to individual firms or the companies, organizations in which the directors or the of the insurers are interested. Right, in which the directors of the insurer are interested. Are you understanding the points over there? Point number 1, whether they have a certificate of registration, then the dues payable, then the shareholding pattern, then they've not invested the funds of the policy holders outside India, they have maintained the solvency margin, then value of the assets have been reviewed, then no funds have been invested in contravention of the provisions of the law, then disclosures regarding the risk exposure and the strategy, then operations in other countries, then the average claim settlement for the last 5 years, then the valuation of investments, review asset quality and the performance of the investment. Then you have the director's responsibility statement and the schedule of the payments, right? And the schedule of the payment, right? So what are these? These are the contents of the management report, right? What are these? These are the contents. Details of payments to individuals, firm, companies and organizations where the directors are interested. So name of the director, entity in which the director is interested as, and payment during the year rupees in thousand, right? So all the payments being made, on behalf of the directors, right? Then also the debt securities additional, the management is also, it says certifies that, so that is again the 3AG, that they ensure compliance, right? And then whether the company has an internal audit system commensurate with the size and nature of its business, right? And it has been operating effectively, and it is signature to the management report for and on behalf of the board of directors. And then you have the annexure to the management report, right? The annexure 1 and annexure 2 to the management report, right? So the outstanding, and then they also have the details of the average claim settlement time. What did we say? Average claim settlement time, right? The average claim settlement time, what did we say? For the last 5 years, right? So they've given for 17, 18, 18, 19, 19, 20, 20, 21 and 21, 22, right? The average claim settlement period has been given over there, and then they've given the abbreviations of the important terms, right? So anyways, have we discussed the contents of the management report over here? Okay, so now coming to the next point of the discussion, which is regarding the, right, the appointment of the auditor, right? Coming to the next point of the discussion regarding the appointment of the auditor. So again, what is the general rule? That who appoints the auditor in case of the general insurance, the insurance company in the public sector, the auditor is appointed by the C and AG, and in case of the others, the auditor will be appointed by the shareholders in the general meeting, will be appointed by the shareholders in the general meeting. So public sector undertaking, those insurance companies, the auditor will be appointed by the CNAG, and other cases the auditor will be appointed by the shareholders in the general meeting. Are you understanding that? Okay, so now say Bajaj Life Insurance, Bajaj Life Alliance Insurance, whatever it is, right? The shareholders have appointed Sparkle and Company as their auditors. They have appointed Sparkle and Company as their auditors. Okay, right. And then 4 options in the MCQ. The appointment is valid, the appointment is not valid, the appointment requires the approval of the IRDAI, or the appointment requires the approval of the central government. Right, so Bajaj Life Insurance Company, the shareholders have appointed Sparkle and Company as their auditors, as the insurance company auditors. A, B, C, D, which is the correct option over there? Right, which is the correct option over there? Yes, which is the correct option over there? B. The appointment is not valid. Why? Because insurance company, it is mandatory for them to appoint the joint auditors, and here they've only appointed the one auditor. Right, it is mandatory for all insurance company. The guidelines also mandate a mandatory joint audit for all the insurance company. Yesterday we had seen 4 or more auditors to be appointed in case of the nationalized bank, the public sector. For private sector, not required. But here it says for all insurance company, mandatory for them to appoint the joint auditors. Okay. Do you know the ceiling on the number of audits? Company law 141(3)(g), what is the ceiling on number of audits? 20 company audit. Now there is a ceiling on insurance company audit also. So Sparkle and Company cannot do the audit of how many insurance company? They cannot do the audit of more than 3 insurance company, and within 3 not more than 2 life or not more than 2 general insurance companies. Okay, so can it happen that Sparkle and Company is doing the audit of 3 insurance company and all 3 are life insurance company? Is it possible? No. Can it happen that 2 life and 1 general? Yes. Can it happen 2 general and 1 life? Right. Can they say they have 1 life and 1 general, one is still empty? Yes. Can they have only 2 life or only 2 general? Yes. Are you understanding? Only 2 life or 2 general, because the total limit is 3, and within 3 there is an internal gap. What internal cap? What is the internal cap? Not more than 2 life or not more than 2 general insurance companies, right? So that is regarding the appointment of the auditors, right? So the auditors of the GIC, its subsidiaries, and the CN is the subsidiaries of the division is made by the C and AG of India, as in the case of the other PSUs like New India Assurance, United India Insurance, etc. Right? So all the public sector undertaking PSUs who will appoint insurance company, who will appoint the auditor, the CNAG, and in other cases the auditor will be appointed at the AGM. Okay. Right, and then what does it say? Currently, an auditor cannot can audit only the 3 insurance companies and not more than 2 life or 2 general, and it also mandates a mandatory joint audit for all the insurance company. Is it clear to everyone? Right, so that's regarding the appointment of the auditor. Now coming to the contents of the report. Right, so that was regarding the appointment of the auditor. Now coming to the contents of the report. Okay, right, so contents of the report. Okay, we again come to section 143.3. Yes, 143.3, 10 points over there. What were the 10 points? Information proper, branch books, AS adverse, directors maintenance, IFC others. Are you remembering that at least by now? And a 143.3 duty as to reporting, and what is main bread and butter? True and fair view. That is given under 143.2. Right. So 143.3 duty as to reporting. So what does it say? Whether he have obtained all the information and explanation. So this is 143.3a. Then whether proper books of account as required by law. So that is 143.3b. Then proper returns for the branches not audited by us. So that also comes under 143.3b. Then whether balance sheet and profit and loss account, are they in agreement with the books of account? That comes under 143.3d. And then you have a different point over there. What does it say? That, you know, insurance company, their liabilities are required to be certified by whom? The insurance company, their liabilities, okay, how much outstanding liabilities they have. Who has to certify this? The actuary has to certify. And you know what statutory auditor needs to certify? Okay, whether actuary has certified. So who needs to certify the liabilities? The actuary. What auditor has to certify? Whether actuary has certified, right? Whether actuary has certified. So whether the actuarial valuation of liabilities is duly certified by the appointed actuary, including to the effect the assumptions for such valuation are in accordance with the guidelines and norms, if any issued by the authority, right? So the actuarial valuation of the liabilities, right? So that's an additional point over there. Right, then did we already discuss this? Balance sheet gives a true and fair view, revenue account, receipts and payment account, and the profit and loss account? Yes. Then also what is another point? That the financial statements prepared are in accordance with the Insurance Act, the IRDA Act, and the Companies Act, and so. Right, so generally what we say, that the financial statements give the information required by the Act, that is Companies Act. But here it also gives the information required by the Insurance Act, by the IRDA Act, and also the Companies Act. Then what does it say? The investments have been valued in accordance with the provisions of the Act and the regulations. Did we study how the valuation of investments is to be done? Did we study how the valuation is to be done? Real estate investment property, debt security, traded and not actively traded, historical cost and fair value. Do you remember that? Right. So whether investments have been valued in accordance with the provisions of the Act. Right. Then the accounting policies selected by the insurer are appropriate, are in compliance with the applicable AS and the accounting principles as prescribed in these regulations, or any other order or direction issued by the authority. So accounting policies are in compliance with the AS. Right. So what is main? First over there, 143.3a, B and D. Then the actual valuation of the liabilities. Then the 143.2, whether the financial statements give a true and fair view. Then whether the financial statements have been prepared in accordance with the Insurance Act, IRDA Act. Then investments have been valued in accordance with the provisions and regulation. Then the accounting policies. Then auditor has to certify. Now what the auditor is required to certify? What he has to certify? That they have reviewed the management report. Did we talk about the management report? Yes, and there is no apparent mistake or inconsistencies with the financial statement. right? So they have reviewed the management report and there is no apparent mistake or material inconsistencies. You know, material inconsistencies we have also discussed in SA 720, other information, right? In the other information, then the insurer has complied with the terms and conditions of the registration stipulated by the authority. So what are the three things, the two things the statutory auditor needs to certify? One, the contents of the management report, that they have reviewed it, and second, they have fulfilled the conditions for registration as stipulated by the authority, right? Then it also says in addition to that, one more certificate has to be signed by the auditor, which is in addition to any other certificate or report which is required by law to be given with respect to the balance sheet. So now what is this one more certificate over there regarding? They have verified the cash balances and the securities, right? So cash and the securities relating to the insurers, loans, reversions, and the life interest and the investments, and that they verified the investments and the transactions during the year. It is transactions relating to any trust undertaken by the insurer as a trustee, and no part of the assets of the policy holders fund have been directly or indirectly applied in contravention of the provisions of the Insurance Act relating to the application and investment of the policy holders fund, right? So this point, was it also there in the contents of the management report? Okay, they have not invested the policyholder funds in contravention of the provisions of the act. You remember that, right? No part. Point number 7. No part of the policyholders fund have been invested in contraventions of the provisions of the Insurance Act, right? So here, what does it say? The investment of the policyholders fund. So cash and investments, they verified the cash and investments, and they've also verified the investments, right? So verified the cash balances and the security, and verified the investments. And then what does it say? The certificate which is required to be issued, right? So the certificate which is required to be issued, with certificate that the investment risk management systems and process. So these are all, this completes our discussion regarding the statutory auditor ka report and certification. This completes our discussion contents of the audit report regarding the statutory auditor report and certification. Now in addition to that, what is one more certificate which is required? One more certificate which is required is regarding the investment risk management systems and processes. One more certificate which is required is regarding the investment risk management system and process. What does it say? This certificate should also be signed by a chartered accountant, but preferably, what does it say? This chartered accountant, not preferably, compulsorily. What does it say? That chartered accountant who is signing this certificate, which certificate? Investment risk management system process, investment risk management systems and processes. It should be signed by a CA who is not the statutory, internal, or the concurrent auditor of the concerned insurer. Again, this they have asked in the MCQ, right? So investment risk management system and the investment risk management system and the processes. Is this certificate required to be signed by a CA? Yes, it is to be signed by a CA. But should that CA be their stat auditor? No. Should he be their internal auditor? No. Should he be their concurrent auditor? No, right? He should not be their concurrent auditor also, right? This certificate is to be signed by CA, but that CA, just as we say, na, okay, a statutory auditor, you cannot be internal auditor, you know, like that. Internal auditor, you cannot be the tax auditor. So here, what does it say? That this certificate has to be signed by a CA, but a CA who is not the statutory auditor, the internal auditor, or the concurrent auditor. So which certificate are we talking about over here? The investment risk management systems and processes, are they in place, right? That certificate to be issued by a CA. Is it clear to everyone? Okay, right? So have we looked into the contents of the report? Yes. So here, what does it say? The actuarial valuation of liabilities, right, have been duly certified by the appointed actuary. So auditor, what you have to certify? That the actuarial valuation of liabilities have been certified by the duly appointed actuary. Then we have issued a separate certificate for some additional points. Then we have sought and obtained all the information explanation. Then proper books of account. Then what does it say? The company's financial accounting is centralized at HO and no returns are required to be received from the branch offices, right? From no accounts for the purpose of our audit from the branch and other offices. Then the balance sheet and the profit and loss account, what does it say? They are in agreement with the books of account. Then what does it say? Investments have been valued in accordance with the provisions of the act. Then the accounting policies are in accordance with the accounting standard, except to the extent where you are required to follow the IRDA. Then what does it say? The balance sheet profit and loss account is in compliance with the AS under 133. Then none of the directors is disqualified under 164(2). Then the adequacy of the internal financial control. Then with respect to the other matters. Are you understanding? So are they doing a combination of 143.3 and also the other points over there? Right? Other points like whether investments have been valued in accordance with the provisions of the act, whether accounting policies are in accordance with the accounting standards except for those given in the IRDA regulations. Are you understanding that? Right? So are they taking care of both of these over here? Yes. And then in addition to that, right, if you look at the report further, right, no funds that the company has paid managerial remuneration, that is fine. Right, then again, do they have the auditors over here? Right, two auditors, right, Russell Pereira and the Rajan Asher, right? So Price Waterhouse Coopers and the GM Kapadia and company, because it mandates a joint audit. Then the independent auditor certificate, right? So auditor certificate, this is regarding the IRDA Act and the regulations. So the company is responsible for the compliance with the provisions of the Insurance Act and the regulations and the IRDA regulations. Right. So we have reviewed the management report and have found no apparent mistake or material inconsistency. Did you remember that? Do you remember that? We have reviewed the management report and there is no apparent mistake or material inconsistency. Then what does it say? Based on the management representation and the compliance certificate, what does it say? Nothing has come to our submitted to the board of directors by the officers, and the same being noted, nothing has come to our attention that the company has not complied with the terms and conditions of the registration. That means the company has complied with the terms and conditions of the registration. Do you see these 2 points over here? Right, they have reviewed the management report, no apparent mistake, and they have complied with the terms and conditions of the registration stipulated by the authority. Have we seen the point number 3 ka 2 points over here, everyone? Right, have we seen those points? Then the cash on hand balance as on 31st March is nil. We have verified the checks on hand to the extent possible. Then the company is not a trustee of any trust, and no part of the policy holder funds have been invested in contraventions of the provisions of the Insurance Act. Right, no part of the policy holder funds have been invested in contravention of the Insurance Act. Right, and then you have the IFC reporting being done, and then starting with the financial statements of the insurance company. Okay, right, so that completes our discussion regarding the audit risk is the contents of the audit report in case of the insurance company. So what have we discussed so far? Introduction, then the important provisions of the Insurance Act and the regulation, principal enactments governing insurance audit, the form and content of the financial statements, contents of the management report, appointment of the auditor, contents of the auditor's report, and the investment risk management and the systems and process audit. Are you understanding that? Right, now we will come to the discussion of the audit of the accounts of the general insurance company. And after we finish our full discussion regarding the general insurance company and some common points also over there, then we are going to come to the discussion regarding the life insurance company. Right, then we will come to the discussion regarding the life insurance company. But now what is the first discussion which we need to have is regarding the general insurance company. Okay, right, let us see what is happening in the question bank over there. Right, question bank, what are the points over there? Yes, the CAB Insurance Company was incorporated on 1st July. Company is mainly in the area of the health insurance and planning to expand in the other fields of general insurance. You have been appointed as a CFO of the company. The company has made investments as per the guidelines in the real estate investment property and the equity securities and derivatives. Guide the CFO as to how the same should be valued. Right, so you have to talk about the valuation of investments of the insurance company. Do you remember those 4 headings over there? Right, then ROK and company, TNK and company were appointed as the joint statutory auditors at the AGM of Auspice General Insurance Company Limited. Apart from the aforesaid audit, ROK and company is also appointed as a joint statutory auditor of one another general insurance company, and TNK and company is appointed as a joint auditor of a life insurance company. How many further audits can be accepted by ROK and TNK company respectively of either either general or life insurance company, right? So again, you need to refer to the appointment of the auditor. And what does it say? It can accept only one audit, and that too only of the life insurance company. Can accept only one audit, but that one audit could be of life or the general insurance company, right? So you need to know the provisions and accordingly write down the answer. So this is again a MTP question, right? And then after that we have the question number 4, which is regarding the verification of the premium income of the general insurance company, right? So now first what we need to talk about over here is the audit of the revenue item. So now we are talking about the general insurance business. General insurance business is mainly categorized into which ones? Fire, the marine, cargo, hull, and the freight, that is the ship insurance, and all of that. And then the miscellaneous business like burglary, motor, aviation, professional liability, loss of profit, crop, cattle, workman compensation, and the engineering, right? So these are the classes of the general insurance business in India. Okay. And now coming to the audit of the revenue items, in which we are talking about the premium. And this question regarding the premium is an ATF. Right? This question regarding the premium is an ATF. Right. So now coming to the revenue items. Okay. Right. So what is the first most important source of income for an insurance company? Premium income. And what is the biggest expenditure for an insurance company? The claims which it has to pay. And what is another expenditure for the insurance company? The commission which is payable to the agent. Another expenditure for the insurance company is the operating expenses, right? The day-to-day operating expenses of the insurance company. So right now we are talking about the premium income of the insurance company. Okay, right. So say a particular policy holder, pay attention, right? Say a particular policy holder applies for a policy on 25th of March 2025. Right. And what does it say? I apply for the policy today. And then when does the insurance company close its books of account? 31st of March 2025. But he says, I will pay the premium on the policy on 2nd of April 2025. Okay. He says, but you give me the policy. He's already applied for the policy on 25th of March. And he says, after the year end, after 2nd April, I will pay you the premium on the policy. And then say he's applying for a fire insurance policy, and say unfortunately on 28th of March only a fire occurred in his premises, and he tells insurance company, see, I had made an application for you for the policy, so now you need to pay me the claim. Is the insurance company required to make a provision for claim while closing its books of account on 31st of March? Is the insurance company required to make a provision for claim while closing its books of account on 31st of March? Is it required to make a provision? No, receive nothing. No premium, receive nothing. And from where are you paying the claim over there? What is the golden rule for recognition of premium income? No risk assumption without premium. And no risk assumption. So the day you pay the premium, that day we start with the risk cover. Till that time, no risk cover. So when will the risk cover start? On 2nd April. It will not start before that. Right? No risk assumption without premium. Are you understanding that, everyone? Okay, right? So let us look into this question over here. Right? The question number 6. As at 31st March 2020, while auditing Universe Insurance Limited, you observe that a policy has been issued on 27th of March for the risk favoring one of the leading corporate houses in the country without the actual receipt of the premium, and it was reflected as the premium receivable. The company maintained that it's a usual practice in respect of the big customers, and the money was collected on the 7th of April. You further notice that there was a fire accident in the premises of the insured on 31st of March, and a claim was lodged for the same. The insurance company also made a provision for the claim. Please respond. Right? Is the insurance company required? Where was the policy applied for? 27. But when was the premium received? On 7th of April. When did the fire occur? On 31st of March. And they said they lodged a claim for the same. Insurance company also made a provision. So you need to write regarding the risk assumption. And in view of the above, the insurance company is not liable to pay the claim, and hence no provision for claim is required. Are you understanding that? Insurance company is not liable to pay pay the claim, and hence no provision for claim is required. Are you able to follow this, everyone? Okay, right. So whenever this question is coming in your exam, what is the content theory which you need to write in your answer? This is the theory you need to write in your answer, right? So what is premium? It is the consideration received by an insurer from the insured under an insurance contract to take some risk on behalf of the insured. So that is the definition of premium. And then very important is the section 64(5)(b) of the Insurance Act. What does it say? As per section 64(5)(b), no risk to be assumed. Are you listening to me? No risk to be assumed unless the premium is received in advance. So no insurer shall assume any risk in India in respect of any insurance business on which the premium is not ordinarily payable outside India. So that's how the law is drafted, on which the premium is not ordinarily payable outside India, unless and until the premium payable is, number one, received by him or is guaranteed to be paid by such person in such manner within such time as may be prescribed, or unless and until the deposit of such amount as may be prescribed is made in advance in the prescribed manner. Right? Let us read it once again. No insurer shall assume any risk in India in respect of any insurance business on which the premium is not ordinarily payable outside India, unless and until the premium payable is received by him or is guaranteed to be paid by such person in such manner within such time as may be prescribed, or unless and until the deposit of such amount as may be prescribed is made in advance in the prescribed manner. In the case of risk for which premium can be ascertained in advance, the risk may be assumed not earlier than the date on which the premium has been paid in cash or check to the insurer. Obviously, simple rule. I told you, no risk assumption without premium. Right? No risk assumption without premium. And what is the question which we saw over there? Question number 6, right? What is the question that we saw over there? Question number 6, right? Then another question. While auditing Innocent Insurance Limited, you observe that a policy has been issued on 31st of March, evening to LM Company. LM Company had signed all the papers and taken the insurance policy of 11 lakh for its new godown, and premium for the same was paid through a check subject to realization. So now they have paid the premium, but they have paid it through check subject to realization. However, on the night of 31st of March, a huge fire accident took place in Element Limited and goods worth 15 lakh were destroyed. However, the check was also dishonored due to insufficient fund. The company informed the incident to Innocent Insurance Limited and a claim was lodged for the same. The insurance company also made a provision for the claim. Advise the Innocent Insurance Limited in this regard. Do they need to make a provision for the claim? No. What does it say? Fire is occurred on 31st March and premium was not received. The Innocent Insurance is not liable for the claim for damage of goods amounting to 15 lakh and hence no provision for claim is required. Right? So again, you write down first that no risk shall be assumed. Therefore, in the instant case, Element signed the insurance documents on 31st of March and paid the premium through check. But later on, it was dishonored due to the insufficiency of funds. In such case, insurance premium is not being received. Thus, if any accidental incident occurs, insurance company will have no liability to pay the claim. Are you understanding that? Yes. Then question number 8. You have been appointed as an auditor of the ABC Insurance Company and found that PQR Limited got their plant and machinery insured on 1st of October, but the amount of premium was paid by them on 15th October. In the meanwhile, on 10th of October, a fire has broken out in the factory and the company filed a claim for damages of the plant and machinery with the insurance company. Advise the insurance company for the same. Again, what does it say? ABC Insurance Company will not be liable for the claim for damages of the plant and machinery. Right? So question number 6, 7, 8. Is it all relating to the same points over there? Right? Question number 6, question number 7 and the question number 8. Right? So question number 6, then the question number 7 and the question number 8. Is it clear to everyone? Okay. Right. Now coming to the verification of the premium income. Right. So now coming to the green color sunglasses. That means now we are talking about the audit procedures for the verification of the premium income. Are you all with me? Audit procedures for the verification of the premium income in case of the general insurance company. है ना? Right now we are talking about which insurance company? General insurance company, right? So one introductory. Yes, please, no talking in the class. Right, no talking required. Okay, now generally to begin with these type of answers of the audit procedures over here, a good way to start our answer is to say that you need to check the compliance with the IRDA Act and the regulations, and you also need to study the effectiveness of the internal control system. Right. Then for premium income, what you can check? You can also check the policy documents or the cover note, and on the basis of which the premium income has been recognized. And again, the insurance company would be maintaining a policy register. Then you also need to check whether premium received in advance has been shown separately. Then any premium which is in arrears, there is no risk assumed for the premium which is in arrears. Then you also need to check in case of the reinsurance, only to the net of reinsurance you've provided the recognize the premium income. And in case of co-insurance, you have recognized the premium income only to the extent of your share. Right, so reinsurance, net of reinsurance, and co-insurance only to the extent of your share. Co-insurance is like the joint auditors and more than one insurance company coming together and providing the insurance cover. Then also what you need to check, whether the insurance company has paid the GST, and whether it has collected, whether it has charged, whether it has collected, and whether it has paid the GST to the authorities on or before the due date. Are you understanding that? Right, so these are the general points which you can write in your answer regarding the verification of the premium income of an insurance company. So what is a good way to start the answer? Verify the internal controls laid down for the collection and recording of the premium. Then review the systems used by the company to collect the money, underwrite and issue the policy. Then ascertain that all the cover notes. Cover note is what? The first page of the policy document, right? The cover note, whether they have been serially numbered for each class of the business. Okay, right? Then again, we have a retail question over here. Again, recently this retail question has been asked in your exam, right? So again, we can mark it as the trending. Right, revenue recognition, that when should revenue, what does it say? One we already studied, okay, revenue recognition, no risk assumption without premium. Unless and until the premium is not received, do we assume the risk? No, we do not assume the risk. Okay, so now what does it say? You are, your policy documents are ready with the insurance company, but the insurance company is not giving the policy documents to the policy holders. Insurance company, are the policy documents ready with the insurance company? Yes, but are they giving it to the policy holders? No, they are not giving it to the policy holder. What is the reason for them not to give the policy documents to the policy holder? One, the premium has not been collected. You say you pay the premium, then I give you the policy document. Second, what does it say? It was collected, but the check by which it was collected, that check got dishonored. Then what does it say? It was not immediately collected due to shortfall in the bank guarantee or the cash deposit, or the premium has been accrued but it has not been received, or the premium have not been collected in time in respect of certain categories of the policy, or the premium collected but policy is not issued for long period of time. So this is different situation. Okay, is the premium collected? Yes, but what happened? You say last 6 months this policy documents have not been issued. So you need to think, no, there might be some reason why this policy documents have not been released and have not been issued. And premium received during the year but pertaining to risk commencing in the following year has been accounted for under the head of premium received in advance and has been disclosed separately. Right, so two separate points, and a premium collected but policy is not issued, and also the premium received in advance. And what is point number A, B, C, D over there? A is what? Premium not collected at all. Second, premium is collected but the check got dishonored. Third one, what does it say? The premium is not immediately collected due to the shortfall in the guarantee or the the deposit. Are you understanding that? Due to the shortfall in the guarantee or the deposit, or the premium has been accrued but it has not been received, or the installment of the premium has not been collected in time in respect of certain categories of the policies. Okay, right? So can we try it once again? When policy documents have not to be issued by the insurance company, premium has not been collected. It has been collected but the check has been dishonored. It has not been immediately collected due to the shortfall in the guarantee or the deposit. Are you understanding that? Or the premium has been accrued but it has not been received. And then what does it say? Installment of premium have not been collected on time in respect of certain categories of the policy. Okay. And then what are the 2 points? Premium collected but the policies have not been issued for a long period of time, or the premium has been received in advance, then it needs to be disclosed separately. Right, then it needs to be disclosed separately. Right, so if I come to the question bank, right, we have this question over here: indicate the circumstances where the company should not issue the policy documents. Right, where the company should not issue the policy documents. Right, so that is question number 5. Right, where the company should not issue the policy documents. Okay, right. And what is another question before question number 5? What are the steps to be taken by an auditor while verifying the premium? Right, so again a question asked 2 times in your exams regarding the verification of the premium income. Right, so what is that? That is question number 4. And now question number 4 is regarding the verification of the premium income. Right, verification of the premium income. And then have we seen question number 5 and 6, 7, 8 also? Right, have we seen 6, 7, 8 also? Yes, so these question number 5 to 8 is question number 4 to 8 is regarding the premium. Then after that we have the questions regarding the claims. Then after that we have the questions regarding the claims, and then we have the other points over there. Are you all with me? Right, so now what are the points I told you? One, internal control system, then the cover notes, then the policy document should not be issued in the following situation, then advance premium should be shown separately, premium received in advance, then reinsurance, what does it say? Net of any reinsurance, the premium income should be recognized, then collections lodged by the agent, then cases of co-insurance, right, the company share of premium has been accounted for on the basis of the available information. Then again, will they maintain a policy register for all the premiums which have been collected? Then premium which is collected periodically. Then cut off procedures, whether it has been recorded in the correct accounting period. Then again, the collections remitted by the agent. Then in case of cancellation of the policy, cover notes issued, no risk have been assumed between the date of issue and the subsequent cancellation. So in case if the policy has been cancelled between the date of issue of the policy and the cancellation of the policy, should the risk be assumed? No. This is such a beautiful point over there. Okay, where premium received has been refunded. And so premium policy was issued. That time was the premium received? Yes. When the policy was issued, was the premium received? Yes. Now say the policy got cancelled. So the premium was refunded. So whatever commission was paid to the agent, whether that has also been recovered. When the agent got you a policy, you paid the commission to the agent. Now the policy got cancelled. So whatever commission you paid to the agent, should that be refunded? Should that be recovered from the agent? Yes. Right. So they talk about the cancellation of policies and the refund of the premium. So we can add these 2 points over here. Right. The cancellation of the policies and also the refund of the premium. So if the premium is refunded, what should happen? Even the commission should be recovered. If the premium is refunded, then even the commission should be recovered. Okay, right. Then after that, what does it say? GST has been charged and again it has been paid, right, for total premium for all classes of business under except for those which are exempted. And check whether the bank guarantees issued for policies issued are valid, and there is a tracking mechanism of the amount of policies issued against the guarantee, right? So that is our discussion for the first heading over there, which is the verification of the premium income. Okay, now coming to the biggest expenditure. Have we seen the biggest income for an insurance company? Premium income. Now what is the biggest expenditure for an insurance company? The claim expenditure. And now for claims we need to discuss 3 questions over there. What are the 3 questions? One, what are the registers and records to be maintained by the insurance company in respect of the claims, right? Then second, what we need to study is regarding what are the audit procedures for doing the audit of the claims provision. And third question which we have is what are the audit procedures to check for the claims paid. Right, so registers and records, claim provision and the claims paid. What points are there for claims provision? Are those points included in claims paid? Yes, plus there are some additional points for the claims paid. Right, so now regarding the claims, we need to discuss the three questions: the registers and records, the claims and provisions, and also the claims paid. Is it clear to everyone? Right, so if we look into this particular question bank over here, what does it say? Registers and records in respect of the claim. Right, then the claims provision in case of general insurance company, then the claims paid in case of the general insurance company, and then again the claims provision and the claims paid in case of the general insurance company. Right, so question number 9 to 12 is regarding the claims. Right, question number 9 to 12, 9, 10, 11 and 12 is regarding the claims registers and records. Then the rest, the verification of claims provision and the verification of the claims paid. What does it say? In addition to the verification procedures for claims provision, in respect of claims paid, the auditor should examine the following points. Are you understanding that? That's why I told you all points which are there for claims provision, will there be for claims paid? Yes, plus there will be some additional points over there. Okay, right. So now, what is this concept of the claim that we are talking about over here? Right, what is this concept of the claim that we are talking about over here? Right, so say insurance policy was taken on 1st of October 2024, and generally an insurance policy is taken for 1 year. So this policy will be effective till 30th of September 2025. Okay, say it's a fire insurance policy example. Okay, now 31st March, will the insurance company close its books of account? Right, 31st March. So 6 months of the policy is falling in the current period and 6 months of the policy is falling into the next year. Are you understanding that? Okay, and now say a fire occurred in the company premises on 25th of March. Okay, is the insurance company liable to pay the claim? Fire occurred in the company premises on 25th of March. Say they've taken a fire insurance policy on 1st October. Is the insurance company liable to pay the claim? Yes, the insurance company is liable to pay the claim. Okay, if they have paid it on or before 31st of March, then do they need to make a claim provision? If they've already paid it, do they need to make a claim provision? No, but if they've not yet paid it up to 31st of March, then as on 31st of March, when they close their books of account, do they need to make a claim provision? Yes, because it takes time, no, to determine the amount of claim. The surveyor will do, he'll do the actual valuation of the loss, then the surveyor's report will come, and then actually the amount will be determined. And sometimes, it happens the other way also. What is the other way it happens? Okay, the insurance company know we have to pay 20 crore, but they don't have the 20 crore. One thought, they don't know how much amount is to be paid. That is why they make a provision. It is called as an estimate. Second one, they know okay, what amount we have to pay to that other party policy holder, 20 crore. But do they have the funds? No, they do not have the funds. So when you don't have the fund also, you need to make a provision. And when the amount is not determined, then also you need to make a provision. Are you understanding? And now, say, there might be some events which might have occurred on 28th of March or 31st of March also or something. Again, are these relating to the current year only? Yes. And also matching procedure. If the expenditure is related, income has been recognized in the current year, the expenditure should also be booked in the current year. But is it necessary that all people who had to make a claim in through the insurance company before 31st of March, that all of them would have made the claim? No, there might be somebody who will come, 28 March, our factory, there was a fire which took place. When he came 2nd April, but now insurance company closing books of account on the 31st of March. So again, does it again need to make a provision for those claims also? Claims incurred but not reported? Claims incurred, there might be some people who come late in the class, that type. Okay, so claims incurred but not reported. You understand? Claims incurred but not reported. And second, claims incurred, they just called up the insurance company and told them that fire has occurred. Okay, but they have not yet submitted all the policy documents and all. So claims incurred but not enough reported. Insurance companies say for us to process your claim, you have to give us so much of information, and they've not given the so much of information so far. Right? So do you understand? Claim incurred but not reported. Then claim incurred but not enough reported. Are you understanding that? Right? And another, what the insurance company is not paying. Why not paying? Due to the insufficiency of the funds. Right? The insurance company is not paying due to the insufficiency of the funds, or the insurance company has not yet determined the amount which is required to be paid. Right? So all this will lead to the claims provision. Are you understanding this, everyone? All this will lead to the claims provision. Okay, right. So let's come first to the registers and records, right? So what is claim over there? The component of the cost of claim, right, to an insurer, comprise of the claims under policy, settlement costs such as surveyor fee, legal expenses, etc. And claims can come from three: direct business, inward reinsurance, and the co-insurance business. Okay, right? So three. In case of if you have done any reinsurance, you will have to pay the claim. Co-insurance, you will have to pay to the extent of your share, and then you have the direct insurance also. Okay, and the liability also includes future payment in relation to reported but unpaid claims. It is reported, but still is the amount paid? No. Second, incurred but not reported claim is including any inadequacy of reserves to settle the claim. And so has the claim been incurred? Yes. But has it been reported to the insurance company? No. Or maybe it has been reported, but the insurance company does not have the reserves to settle the claim. Or the accounting estimate, which should adjust the claim cost for salvage value if there is any sufficient degree of certainty in its realization. So from the claim payable, should you adjust the salvage value also over there? Yes, you should adjust the salvage value also. Okay, right. So now coming to the first question over there, which is regarding the registers and records, right? So what are the registers and records? This is something like the books of account which should be maintained by an insurance company with respect to claim. What are the books of account an insurance company should maintain with respect to the claims? One, it says the claim intimation register, right? So the moment a fire occurs in the company premises, one, you call the fire engine department, and second, you call the insurance company. You understand? So one, then the insurance company, you tell them, okay, a fire has occurred, then you fill the claim docket and everything, right? So claim intimation register. Then after the intimation, the claim would have been paid. Obviously, you can check the entries in the bank book also. So the claim disbursement bank book. Then the entire claim docket. So just as you know, in a bank, you have a loan file. In a bank, no, there is a big loan file which is created. Similar in case of insurance company, there is a big claim file which is prepared over there. And what is there in that claim file? The claim intimation, the claim form, the particulars of the policy, survey report, photograph showing the damage, the repairer's bill, the letter of subrogation, that is some part of the policy being, not being insured or so, policy report, police report, the fire service report, claim settlement note, claim satisfaction note, salvage report, salvage disposal note, claim discharge voucher, etc. Right? So all this is included in the claim docket. Are you understanding that? Then also it says it includes the report of the, right, what is included in the registers and records is also the report of the quality assurance team and the salvage register, right? So what is included in the registers and records? So one, they are talking about which registers over here? Three registers they are talking about over here. Which three register? Claim intimation register, claim paid register, and the salvage register. Is it clear to everyone? Then they are talking about two Ds over there. Which are the two Ds that they are talking about? One, the claim disbursement bank book, and the claim docket. And then after that, you also have the report of the quality assurance team, right? So claim intimation register, claim paid register, salvage register, and then the claim disbursement, the claim docket, and the report of the quality assurance team. Okay, right. And now we come to the discussion regarding the green color sunglasses. What are these green color sunglasses? The audit procedures for doing the audit of the claims of the general insurance company. Is it clear to everyone? Right. So now 31st March, when the insurance company is closing its books of account, for what does it need to make a claim provision? Right, 31st March, insurance company closing books of account, all the amount which it is, whether incident has happened or they know the amount to be paid, but they don't have the money to be paid. So all those claims which are yet to be settled, for those the insurance company needs to make the claim provision, right? So most important word which you can use in your answer is that claim provision has been made for all the unsettled claims at the end of the year. It has been made for all the unsettled claims. If it is settled, then there is no question of paying any premium. of paying any claim. But if it is unsettled, then what does it say? Whether claim provision has been made for all the unsettled claims at the end of the year. Now, how do they make the provision for the claims, unsettled claims at the end of the year? They could be having a predetermined formula. Right, so in case if the insurance company has a predetermined formula for the same, as an auditor, what you can do, you can check the formula on the basis of which this claims provisions are calculated. Then you need to again write over here the points regarding the reinsurance. Claim has been recognized, claim provision has been made net of any reinsurance. Then also claim provision has been done net of any salvage value. That claim provision has been done also net of any salvage value. Then it says in case of co-insurance, the claim has been, provision has been made only to the extent of the own share. Then also what does it say? In case of the underinsurance, in case of the under insurance, you need to check whether the average clause has been applied. That means what? Total inventory of the company 100 crore, but they took an insurance policy only for the 50 crore. And now the stock of the company got destroyed due to fire. And how much stock got destroyed? 20 crore. So now how much money are you going to get from the insurance company? 20 crore? No, you will only get the 10 crore. Why? Because you had insured only half of your stock. And so under insurance, you need to check whether the average clause has been applied. Are you able to follow, everyone? Right? I cannot repeat certain things. When first time I discuss it with you, that time only you need to be attentive. You understand that? Okay. So what are the three types of insurance that I talked about over here? Reinsurance, co-insurance, and the underinsurance. Are you understanding that? Okay. Right. Then sometimes there could be a dispute regarding the amount of the insurance to be paid. So in that case, you can have a discussion with the lawyers. Then there could be the amounts which are deposited with the court. So amounts which are deposited with the court should not be considered as the claims paid. And amounts which are deposited with the court should not be considered as the claims paid, right? Then again, this claims provision could have been done by an actuary. So again, you need to check the certificate which has been received from the actuary. You need to check the certificate which has been received from the actuary. Also, you need to check for any subsequent events, right? Subsequent events will give you additional information regarding the claim provision to be made. Also, you need to check whether the claim provision has been done in accordance with the AS 29 or the Ind AS 37. That is, the, yes, what you say, the provisions. And the provisions has been done in accordance with the AFRF. Right. Then also, can it happen that a particular car was purchased in Hyderabad? Right, a car was purchased in Hyderabad. So where the insurance policy was taken of that car in Hyderabad, and say that car met with an accident in Bangalore. You understand? So now the policy, what you say, the claim proceedings will be taken care of in Bangalore, right? So is intimation required to be given by one branch office to another branch office over there? Right. So again, that could be a situation. Okay, the claim policy has been issued at one location, but the event has taken place at the another location. Is that possible? Okay. And then as per the management, how much claim provision they need to make? 1,000 crore. As per auditor, how much claim provision they should make? Say 1,200 crore. So is there a difference between the judgment of the auditor and the management? Difference in the liability which has been calculated by the management and the auditor? Yes. So if there is a difference in the liability which has been calculated by the management and the auditor can mention the same about it in his audit report. Okay, according to him, there is an under provision of 200 crore. According to the auditor, there is less provision done by 200 crore. Right, there is less provision done by the 200 crore. Okay, right. So these are the points which you need to write in your answer. Now what happens? Only when you've studied, you're able to write down these points in your exams. Then only this terminology will come in your answer. And unsettled claims, predefined formula, then reinsurance, co-insurance, underinsurance. Then they also talk about the incurred but not reported claims, or the incurred but not enough reported claims. Right, the incurred and no, incurred but not reported claims, right? Incurred but not reported claims, and the incurred but not enough reported claims, right? So even for them, the claims provision is required to be done. Okay, right? So verification of the claims provision, has it come as a question in your exams? Yes, it is an ATF. Right, so many times I see AI has asked a question regarding the verification of the claims provision, right? So again over here 3 times, 4 times, right, and 5 times, right? So in total 5 times question has come in the exams regarding the claims provision, right? 5 times the question has come regarding the claims provision. Okay, so what does it say? Claim provision should be made for all the unsettled claims at the end of the year, right? So now see, in the exam the question won't come beyond 4 to 5 marks. Okay, there is no hard and fast rule, but generally if a question come for 4 to 5 mark, we write down like 7 to 8 points over there. No, here though they have given, oh my god, so still I have tried to consolidate and reduce the content over there, but so much of content has been given. But again, with the so much of content, what is the risk? That they can ask the retail questions over there, and they can prepare the retail questions over there. But if a question is asked at the wholesale level, this much of point which I have told you over here, will it be sufficient? Will these be sufficient? Right, these points are going to be more than sufficient over there. Okay, right. So what are we talking about? Unsettled claims. Then insurance company normally have an initial provision or a default provision, and this is done on the basis of a predetermined formula. Then claims are incurred by insurance company, but they are not reported at the balance sheet date. Such claims are known as the claims incurred but not reported. And check the records to ascertain that adequate provision has been created for such claims also, and calculation of the IBNR and the IBNEAR is done by the appointed actuary. Or claims incurred but not enough reported, right? So incurred but not reported and incurred but not enough reported, right? So if you write down these 3 points also in the answer in the beginning, wonderful, super. You understand? No, unsettled claims formula: incurred but not reported, incurred but not enough reported. Then obviously insurance company needs to make a provision only for those claims for which it is legally liable. The insurance company needs to make a claim provision only for those claims where it is legally liable, right? So where it is legally liable. When it will be legally liable? When the risk was covered by the policy. Then what does it say? The loss event or the nature of the loss is not excluded from the policy, and the person who has incurred the loss is the policy holder. So the risk was covered, it was not excluded, and also the person who has incurred the loss is the policy holder, right? So then only it will be legally liable, right? They can make this into an MCQ in the exam. Right, so risk was covered, it was not excluded, and also the person who's incurred the loss is the policy holder. Then provision made should not be in excess of the amount insured, obviously. Right, if the insurance cover is of 10 crore, can you make a provision of more than 10 crore? No, not required. Okay, right, then auditor should also examine the subsequent events. Then also claim status report in case of the large claims, right? So again, for the large claims, you can check the claim status report, right? Then after that, the average clause has been applied in case of the underinsurance. Then payment has been made on account to the parties wherever payments have been booked to the claims, and a net of payments, like it's a big claim, the insurance company needs to pay 100 crore. Now entire 100 crore insurance company is not going to pay in one go, they'll pay in parts, right? So that is the on account payment. Then co-insurance, you've made a what do you say, you've made a provision only to the extent of your share. Then if there is any litigation going on, so again you need to ascertain the reasons for carrying on the provision. Then again, if any legal advice has been taken, the auditor needs to check the legal advisor's view, right? Then amounts deposited with the court, is adequate provision has been made, right? Then no contingent liability is carried in respect of claims intimated for policies issued. Why? Because it's not a contingent liability, it is a provision, it is an amount which you certainly need to pay. Then claims are provided net of any estimated salvage value, right? Then provision has been retained at the year end in respect of guarantees given by company to various courts for claims under litigation, because what did we say? Amounts deposited with the court will not be considered as the claims paid, so that again you need to carry forward the provision. Then did I tell you about the office? Right, claims lodged at an office of the company other than the where the policy was taken. A vehicle insured at Mumbai has met an accident at Chennai. Right, so that point. And in case if there is material difference in the liability estimated by the management and the auditor, what the auditor can do, he can bring out the same in the audit report after obtaining the information from the management. Okay, right, so these are the points which we have over there regarding the claims provision. Now we have the points regarding the claims paid, right? So can I write the same points which I have for claims provision for claims paid also? Yes, we can write down the same points, but in addition to that, what are the the additional points which can be written in your answer? Again, you write down the point regarding the co-insurance and the reinsurance. Right, co-insurance, you've made a payment only to the extent of your share, and again necessary claims have been made to the reinsurer. Are you understanding that? Okay, right. Then you also need to check whether it is the partial settlement or whether it is the final settlement, right? So payments made against the claims have been partially settled, have been duly vouched, and if it is the final settlement, then an unqualified discharge note, can not even a single rupee more the insurance company is going to give you. Final settlement is done, claim file is closed, right? So partial settlement or the final settlement. And say once the amount has been decided and within 30 days of the receipt of the last document, the insurance company does not pay the claim, then what does it say? It has to pay the interest on such delays, have to be paid as per the IRDA regulation. So partial settlement, final settlement, and if they do not make the payment within the 30 days, then what does it say? It also needs to pay the interest on the same. Okay, right. Then after that, what are the other points which are there regarding the claims paid? It says again, claims paid should be not be paid if it is the premium has not been received. Right, so when should the claim be paid? Only when the premium has been received. We said no, premium not received, then where are you paying the claim? Right, so if premium is not received, there is no question of paying the claim. Then obviously the advice received from the other insurance company for the share of premium. So this is again a point of the co-insurance only, right? So this is again a point of the co-insurance only. Right, then claim payments have been sanctioned by the authority concerned. So premium has been received, it has been sanctioned by the authority concerned. Then salvage value has been duly accounted for, right? So premium has been collected, then the claim payment has been authorized, then salvage value has been accounted for. And what does it say? Amounts deposited with the court have not been treated as the claims paid. And amounts deposited with the court have not been treated as the claims paid, right? So these are the points we have for the claims paid. What are the points we have? Co-insurance and the reinsurance. Then after that, partial settlement and the final settlement. Then the 30 days, then interest is to be paid. Then after that, we also have the premium, the authorization and the salvage value, and the amounts deposited with the court will not be considered as the claims paid. Okay, right? So that completes our discussion regarding the claims provision. Right, that completes our discussion regarding the claims provision. Right, next question which we have over there is the verification of the commission of the general insurance company. Again, a question asked 3 times in your exams, right? So question number 13. Right, question number 13, which is regarding the verification of the commission payable to the agent of the general insurance company. Right, so what does it say? The commission or the brokerage, and what are they talking about here is that no commission can be paid to a person who is not an agent of the insurance company. So obviously an insurance company can pay commission only to its agent. Okay, right. And now what does it say? The commission which is to be paid to the agent, it has to be within the limit. Whatever is the limit, whatever is the rates of calculation, it has to be paid within the limit. Then for what are you paying the commission to the agent? For whatever business he got for your insurance company. If he did not get the business for your company, are you going to pay him the commission? No. So only for that part you are paying the commission to the agent for which business he has solicited for the insurance company. Or say this particular agent had done a fraud in the past. He just wrote some fake policies and he collected the commission from the insurance company. Then such type of an agent could be blacklisted by the IRDA or the authorities, right? So what do we say? Limit, solicitor, and blacklist. Right, first 3 points over there, right? Limit, solicit, and the blacklist. Right, then after that, obviously the commission has to be paid as per the rates which have been given by the IRDA. Then you need to check the entry. The entry ka point is so, oh my god, amazing. Why amazing? Vouch the disbursement entry with reference to the disbursement voucher with the copies of the commission bill and the commission statements. Right, so vouch the disbursement entry with reference to the disbursement voucher with the copies of the commission bill and the commission statement. Right, so rate entries and the authorized rate entries and the commission outgo. Commission outgo means whatever commission has been paid for the period has been correctly accounted for. Right, so the accounting entry for the same. So limit, solicit, and the blacklist. Then after that, rate entries and the outgo. And then you have 3 points of A over there. What are the 3 points of A? Authorization, amount, and the agent's ledger. Right? The authorization, the amount, and the agent's ledger. So what does it say? Vouchers are authorized by the officers in charge. Check the correctness of the amount of the commission allowed and scrutinize the agent's ledger and the balances. Examine accounts having debit balances and obtain information on the same. Right? So how many points do we have in the commission payable to the agent of the general insurance company? Right? Commission payable to the agent of the general insurance company, limit, solicit, blacklist. Then you have the amount, authorization, and the agent's ledger. And then you have the rates, right? Then the entries and the commission outgo for the period. Has it been duly accounted for? Is it clear to everyone? Right? Limit, solicit, and blacklist. Then the, right, what does it say? The authorization, amount, and the agent's ledger. Right, so first three you have to remember the last alphabet, and next three you have to remember the first alphabet, and then you have the rates, entries, and the commission outgo for the period. Is it clear to everyone? Commission. Again, a question asked 3 times in your exams regarding the verification of the commission paid to the general insurance agent. Okay, next one, the operating expenses relating to insurance business. Like, Schedule 3, does it also talk about miscellaneous expenses? Schedule 3, Companies Act, does it also talk about miscellaneous expenses? What does Schedule 3 say? General expenses, miscellaneous expenses? 1 lakh or 1% of revenue, whichever is higher, should be shown as a separate head of the expenditure. Now, in case of insurance company, is Schedule 3 applicable? In case of insurance company, is Schedule 3 applicable? No. So that is why in case of insurance company, it says operating expenses, which are 5 lakh or more than 1% of the net premium income is required to be shown separately. And expenses not directly related to insurance business are required to be shown separately. Right, so 5 lakh or 1% of the net premium to be shown separately and not directly related to insurance business. Again, those are required to be shown separately. Right, so 5 lakh or 1% of net premium, whichever is higher, should be shown separately. And expenses not directly related to insurance business, like say bank charges, is it directly related to insurance business? No. So those expenditure from rupee 1 of the expenditure, they are required to be shown separately. And what does it say? The major component, advertisement, sales, promotion, marketing, are a major component of the operating expenses of an insurance company and comprise of costs incurred to promote the company, a specific product, or a general awareness about the insurance. So what are the major components of the expenditure of insurance company? Advertisement, sales, promotion, and the marketing expenses. Okay. Then in case of the insurance companies over here, you have a concept of underwriting. What is underwriting? Like say, you want to take a health insurance policy. So now when you have to take a health insurance policy, first they will tell you to do a health checkup. You understand? First, they will tell you to do a health checkup. They will check all your blood glucose levels, all your reports, right? Then again, your past history of ailments or so, and also the age of the person. And then after doing all this analysis, then after that, they decide the amount of the premium. First, they decide whether the policy is to be issued or whether the policy is not to be issued. Let's say a person 89 years old is saying, oh, I want to get my life insured. They say, no, no, no need for you to get insured. You sit down. You understand? No. But say normal 20-year-old or any other person wants to get himself insured. Then what the insurance company will say that first we need to get the health checkup done. Right now, again, in the health checkup, if any reports come, any findings are there, then obviously the amount of premium will be higher. Right. So before issuing a policy, does the insurance company do the checking of the terms and conditions at which, or the amount of premium at which the policy should be issued? Yes. So that is called as the underwriting, screening of each applicant, whether the insurance company should accept the risk or not. This comprises examination and evaluation of the applications for the insurance, the rating of the risk, the establishment of the premium, which is fundamental to the operations of a general insurance company. So not that anybody comes and say, oh, you go somewhere and say, I want a packet of biscuit, and they say, give 5 rupees, take this packet of biscuit. No. You say, I want an insurance policy, and they say, pay 20,000, take the insurance policy. No. They have to do the underwriting of the policy. So are you understanding the underwriting of the policy, the screening of the application, right? The screening of the application for the insurance policy, right? So should accept the risk or not? First question. Then if we accept the risk, what should be the rating of the risk? How much should be the premium be charged? Which is fundamental to the operations of a general insurance company. And the prime objective of the internal control system for underwriting is to adherence to the guidelines for acceptance of insurance, proper recording of insurance risk and its evaluation, right? So that's our discussion regarding the revenue items. What revenue items have we discussed over here? Did you see this heading 13.6? It was the revenue item. So what are the revenue items we discussed? Premium, then the claims, then after the claims the commission, and then after the commission the operating expenses related to insurance business, and just two small points over there regarding the major components and the underwriting, right? So we take a break and then we shall continue.